All right, should be looking good. I believe we are live. Let's get this stream rolling. So welcome back to the channel. Happy Halloween for everybody that celebrates, especially here in the USA. I know it is an international holiday though. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is October 31st, 2021. Before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, cool. Everything looking good. Excuse me. Okay. So before we get started today, I want to take a quick look at these four charts I have pulled up on the screen. These are four charts that I always have pulled up on my personal screen. We'll see the TNX, 10-year Treasury Yield, in the top left-hand corner. XAU, Gold Spot Market, in the top right-hand corner. DXY, US Dollar Currency Index, in the bottom left-hand corner. And, of course, Bitcoin, a.k.a. the digital gold, a.k.a. digital corn. Why do I watch these four main charts? Well, they're all extremely important. They tell me where smart money is going, where speculative money is going, what the actual market is thinking. They give me a broad perspective of what other people are thinking. Traders, investors, international, and in my own home country. Each one has a different importance and tells me something different, but all are equally important, in my opinion. So what I want to look at today is, what are these charts telling us? What have they been telling us through 2021? Did we miss anything? And what are they telling us now? Because I have a feeling that if we look at these four charts, that we could figure something out about these markets that other people aren't noticing. So let's figure out, what are these four charts telling us? Well, first off, let's look for some similarities, okay? So each of these four charts is dated back to 2021. I know you can't really see well down in the bottom left-hand corner just because of my computer image, but I'm not going to mess with it. But essentially, I will just explain it to you. You're not going to miss much, I promise. But each of these charts is 2021 till present on the daily time frame, okay? So let's look at the TNX first, the Treasury Yield. So this is inverse to the 10-year Treasury bond. So if we have a low down here at the 200 moving average in the beginning of 2021, and then we have a top in March of 2021. Let's look at the dollar now. The dollar had a low down here at the beginning of 2021, a macro low on, what amounts to, ever. And then again, a top here in March. Okay, that is definitely interesting. So now let's look at gold here. Gold topped at the beginning of 2021. So when these two were putting in a bottom, gold was putting in a top. And that's an all-time high. So these were putting in basically all-time lows. Gold was putting in an all-time high. So they're clearly trading inverse of each other. And then let's look for the bottom here. March 2021. So when these two were putting in a micro top or a short-term top after their macro bottoms, gold was putting in its macro top and then a short-term bottom. Interesting. So trading completely inverse of each other. Now let's look at Bitcoin. Bitcoin at the beginning of 2021 was already on a parabolic bull run around like $30,000 roughly. Had broken out to new all-time highs. So similar to gold, gold was putting in all-time highs around that time. Bitcoin started to sell off, but then continued to a new all-time high. And when did it top? Well, right around that same time, right around March, April. So it was trading like gold, putting in new all-time highs. And then when gold started to sell off, Bitcoin kept going up. And then when the dollar and the 10-year Treasury bottomed, after going down for a long time, they both started to go up. Bitcoin topped around the same time as they did. So then since that happened, so we know gold and Bitcoin were trading very similar, reaching all-time highs. TNX and the US dollar were trading very similar, reaching all-time lows. And then we broke that correlation between Bitcoin and gold right around that time. And then Bitcoin proceeded to go up another 100% off of its all-time high, and gold went into, a pullback. So what does that tell us? Well, gold is typically an inflation hedge, and people run to it when they're afraid of the system breaking down or issues. So at some point in time around January, people were not afraid anymore into gold, but perhaps were thinking, Bitcoin maybe replaced it. Maybe the fear is not necessarily the same, but there's still fear there in a different way. We can make all kind of speculations, but the fact of the matter is that's when they broke correlation. And then Bitcoin actually started trading correlated to TNX and DXY, because we'll notice it topped out around the same time. And then let's look at TNX now. It came down and put in a micro low, a higher low, right around, roughly July. It double bottomed in August. Now let's look at the dollar. The dollar sold back off DXY and put in a low right around, May. So a little bit beforehand. And then let's look at Bitcoin. Bitcoin sold off and started to put in a low basically right around June, July, same thing. So Bitcoin is trading very much like the Treasury since then, very similar to the dollar since then, and then opposite of, gold as it kept running and broke its correlation then. And then we see when these were all bottoming around, June, July, May, putting in that micro bottom right here, anywhere around here you consider anywhere from May to July. Basically, there was an accumulation pattern going on. So these were all trading, bottoming around the same time. And then meanwhile, what was gold doing? Gold was running back up and topping in June. So again, these three are trading in line, and then gold is trading inverse. So once the correlation was broken here between gold and Bitcoin right at the beginning of 2021 in January, it started trading very much like the DXY and the 10-year Treasury. So now these three are all very correlated. So now what's happened since then? Well, gold has sold off and has, we'll say, come down and retested the lows, but has not taken those lows out. And now it's right around in the middle. Can't really tell what gold's going to do. It's basically just trading at the 200 exponential and simple moving average, basically just waiting to pick a direction. So if we use the 200 exponential and simple average to determine, is this asset undervalued or overvalued based on that time frame and that period, which in this case we're looking at 200 days, we could say that it's trading right at its value. It's not at a deal and it's not overpriced. So now let's look at the 10-year Treasury. The 10-year Treasury is slightly below that low now. So after it bottomed here, it started running back up. It's on top of the 200 exponential and simple, and it's retesting those highs again. Now let's look at the dollar. The dollar is on top of the 200 exponential and simple. It has taken out that micro high here and is trading at, essentially new micro highs based on this. And then if we go over to Bitcoin, we'll notice the same thing. We're back on top of the 200 exponential and simple, and we're basically trading at or, around the all-time highs. So again, we're seeing a direct correlation still between 10-year Treasury yield, the DXY, and Bitcoin. Since Bitcoin broke its correlation with gold, back in January, these three assets have basically been trading in line this entire year. Now, obviously, the gains in Bitcoin are going to be exponentially more than the gains in, the DXY, or, depending on how you look at it, the percentage gains in the Treasury. But if we know these three things are trading in direct correlation, we know the DXY looks like it's about to go on a parabolic bull run that could last for years. We know the 200 exponential is crossing back over the 200 simple, and Bitcoin is breaking out to new all-time highs, while these are breaking out from all-time lows. What does that tell us? It tells us Bitcoin is probably, if it stays correlated to the TNX, the DXY, and Bitcoin all stay correlated, they're probably all going to pump pretty big. So while this is not a certainty, looking at what's been taking place over the last year can give us an accurate idea as to what the mentality is of, people around the world, how they're looking at these different assets, whether it's, a speculative asset, a currency in relation to other currencies, or the percentage yield on, treasury bonds, which are considered to be, the safest place to put your money. And then we know that gold, which is the longest historical value, the longest, time frame, the oldest sound money, is trading inverse to those things. So if that continues, if these three charts are going to continue trading inversely to gold, and gold is at a decision point right now, and these three charts all are bullish and look like they're about to break out to, the upside aggressively, tells us gold is probably about to get wrecked. Tells us gold is probably going to fail here and break down from these levels. Not to new lows. Maybe not even that low. Maybe it only loses 10, 20, 30% of its value. But according to the information we have for the past year, that's what it looks like is about to happen. Now, is it possible that they break their correlation? Is it possible that gold breaks out to the upside with the dollar, or gold breaks out to the upside with Bitcoin, or all four of them break out to the upside? Sure, any of those things are a possibility. But right now, what we're seeing is a direct correlation between the 10-year Treasury yield, the DXY, dollar compared to the basket of currencies, and then Bitcoin. And we're seeing an inverse correlation to those three assets and gold. So if those three are going up, gold is going down. Very important to consider. Now, could this reverse at any time? Could we go risk off, and all of a sudden, gold breaks out to the upside, and, Bitcoin and stocks sell off, and then the dollar goes parabolic and the yield goes parabolic? Sure. Anything can change at any point in time. But if they've been doing it for last year, I think it's a good indicator, or good to at least keep in mind for perspective. So, very interesting what's taking place now. And again, obviously, gold is failing to get back above the 200 exponential and simple, and they're in a downtrend. The 10-year is back on top. The 200 exponential is still slightly below the 200 simple, so it's bullish, but not all the way bullish. The DXY is extremely bullish. It's on top of the 200 exponential and 200 simple, both slope to the upside. And Bitcoin has now had the 200 exponential cross over the 200 simple, both sloped. Well, I say both slope to the upside, but technically the 200 simple is lost its slope, but all it has to do is just go sideways for a little bit and the slope will shift back to the upside. So you could say there's a little indecision or whatever, but for all intents and purposes, very bullish. But anyway, just wanted to talk about that for a minute. What's up, Volipor? How you doing, man? How are you still doing TA, man? Imagine some people look at mutual information when learn. I know English is not your first language, but I'm not really sure what you're saying, to be honest. But I hope you are doing well, my friend. Hopefully you have done well in these markets. Curious how your indicators and everything are going. Not sure. Do you still have a YouTube page or YouTube channel? But anyway, I'm going to keep going. Feel free to comment back. Good to see you, though. I hope you are doing well. Hopefully your family is doing well. Nice and healthy and financially in good shape. But anyway, just wanted to kind of talk about the correlation between these, as we kind of look over them. So, and then we'll just get into our typical breakdown and keep on rocking and rolling. So obviously, 10-year Treasury has been doing basically what we've been expecting. We are essentially putting in this cup and handle pattern or inverted head and shoulders. We are up here at our resistance, this blue line here, running into resistance. Eventually, we break through this resistance. We would expect the yields to move back up. The measure move of the cup and handle or inverted head and shoulders should take us up roughly to the 3.0, 3%. So, and we know obviously that is correlated inversely with bonds. But as we are getting our monthly close now on our crypto and other assets, I do want to take a look at them and see what the monthly chart is telling us. So here, obviously, we entered into a bullish trend, hard buy signal coming out of the bearish control zone, multiple green histograms in a row. We're above the zero line. We're above the slope line. Eventually, the slope will flip over blue, and this will go into a longer uptrend. So we can expect that breakout sometime in the next couple months. We're seeing here on the stochastic hit the bullish control zone, ran into some resistance, right here correlated with the neckline. And then obviously we would expect that to roll over, kind of cool off for a little bit, and then get that final move back up into the bullish control zone, which would line up with our measured move, taking us roughly to that 2.75 or like 3.0 area. And if we just sort of look at the chart here, we can see obviously this has been in a long-term bearish downtrend since 1981. Yields have been going down and down and down. Bonds have been going through the roof. Well, the top of our resistance here lines up almost perfectly with our support, or I'm sorry, our 200 exponential and simple moving averages. So if we can break through this, find support, get that measure move up, we're looking at basically that 2.75 to 3.0. But overall on the monthly chart, very bullish. Very bullish. But we could easily see a little bit of a cool off, sideways action before we get that push up. We could even see this act as resistance, break back down, get the final move back down to the 618, find support on 200 exponential and simple, and then see that continuation. But overall, playing out perfectly as expected. If we take a look at the TLT 20-year, and the reason I like to look at the 10 and 20-year, or like short-term and like longer-term, or mid and long-term, is to see basically, are we seeing like a yield curve inversion, which we actually are starting to see to some degree between like short and long-term durations. So here we have the TLT on the daily, hard buy signal, basically trying to get back on top of the 200 exponential and simple, showing some signs of, potential bullishness on the daily. And then if we switch back over to the monthly, we can see basically we're trying to reclaim the 8 and 21 moving average. We were able to close that monthly slightly on top of them. But, at this point in time, we barely just reclaimed them right at the end of the month. So still kind of indecision. We are seeing the stochastics kind of rounding out, but we are below the slope line, below the zero line. So, overall, it looks like the longer term trend will be down, as this red slope line or blue slope line will flip over red sometime in the near future if we do not see an aggressive move back up here. So while we could easily see some short to mid-term moves up on bonds as we see the yield prices, yield percentages going down, this is basically telling us same thing on the monthly. So nothing really changing there. Obviously, that was a good monthly close if you are bullish on bonds. Let's look at the VIX next, volatility of the S&P 500 index. Obviously we have two key levels we're paying attention to. We have the top up here, the red area. We have the bottom down here, the green area, and then the channel in between, the heart line here at like roughly 2021. And then we obviously have this descending channel. And then our 200 exponential moving average and 200 simple are right at that heart line. So as long as we're below that level, we expect little to no volatility in the stock market, and then basically to just melt up, which has been taking place and probably will continue to take place until we get down to this like 13 level down here, the bottom of the channel, or above our 2021 level. Nothing really changes for me there. So I would expect basically as this volatility index sells off, stock market to continue melting up. We are, however, seeing a hard buy signal coming out of the bearish control zone, multiple green histograms. So there is a possibility or likelihood that this will start to gain momentum to the upside, and we will actually see a sell-off or increased volatility in the stock market. All right, so now I want to talk about something else that everybody is always talking about, and it seems like nobody understands, or I don't know. It's just the same narrative over and over again that I just keep hearing all the time. But the money supply, they printed 40% more money. There's so much more money. There's 30% more money in a year. There's all this money. There's too much money. Everything, the inflation, because the money. Okay, sure. Let's talk about M2, money supply. Okay. Going back to the 1960s, we see a very clear, just, up and to the right. Okay. I've marked a couple important times on this chart here so we can see something. Okay. So we have the red line here in 81. We have a green line here in 86. We have a red line here again in 97. And then here these are the most important ones. April of 2019, I have a blue line here. And then here we have February of 2020. I have a green line here. And then we'll see, this is what everyone's worried about. This right here, this little bit. This looks normal. This looks like the whole rest of the chart. It's slightly more ascending, slightly increased, but this is what we're paying attention to. This move right here. Okay, that push up right there. That's the one that scared the hell out of everybody. Everything else, you know, in the grand scope of things, if we didn't have that right there, it would just look like this line is still just going up the same. So this little thing right here, that's what everybody's scared about, okay? And this is obviously the amount of money in the system, you know, M2. And this is when everybody talks about money supply and they're printing so much money and the inflation and everything's going to go, you know, it's unaffordable and unobtainable and you're going to own nothing and be happy and, oh God, this right here. Oh, I'm so scared. All right, so now let's look at M2 velocity. Okay, so this is the velocity chart going back to the 1960s. So what are we seeing on the velocity here? What's going on with the velocity? What's important? Well, I marked those same levels on this chart and they mean a little something more. In 1981, this peaked to the upside. And in 1986, it peaked to the downside. Okay, let's switch back over real quick. 1981, it peaked to the upside. 1986, it peaked to the downside. Nothing really changed on this. Just looks the same. Looks the same. And then once again, in 1997, the velocity of money peaked. And this is a macro high. This is from the 60s to, you know, basically 2000. For 40 years, this was basically going like sideways. And then it started to aggressively go up in 86. What happened in 86? Well, this is when Volcker basically raised rates. And then the velocity of money started going through the roof. And then we topped out right around, you know, 97, you know, whatever. Call it 2000. And then what happened then? You know, housing market, or I'm sorry, the stock market crash. .com bubble burst. You know, 06, 07, what happened here? You know, that was before the housing market crash. And then what happened here? This was right before COVID, right before CVD, April 2019. That was, you know, when the news came out about COVID, basically. And then what happened then? Fell off a cliff, okay? Very, very aggressively to the downside. All right, so this blue line here was right around when we heard about COVID. And then this green line here is basically the bottom, okay? So now let's switch back over and see something. So this blue line here was when we like basically heard about COVID. And then the green line here, that was basically, you know what, the bottom right there, right? And then since then, they made a bunch more money. They had a bunch of money into the system. Okay, we went from 155. I'm going to just skip all the extra little garbage, but it's 155 and then 73.92. So we'll just say 155. So it went from 155 to 20982 or 210. So 155 to 210. So we know roughly, you know, what, 33% increase. 155 times 1.33 will give us roughly 210. So there was a 33% increase in money supply. And that's what gave us this initial bounce right here, was basically from 155 to 180. And then we just continued basically at the same rate we've been going on forever. So remember the blue line here and the green line here, we got a burst after the green line and we've been just going crazy since then, you know, but essentially just rising at that same rate. Let's look at M2 again, the velocity. Okay. Let's look at this. So this is when that blue line came in, 145, and then we fell off a cliff. And then this was that green line. And look what happened after the green line. We got this. This is the response that money velocity had to a 33% increase in the money supply. Nothing. And then what happened afterwards? It went back down. And where are we now? We're basically back at the low. We're back at the all-time low. So what is happening right now is called diminishing returns. They're printing exponentially more money, quote unquote, or, you know, whatever, stimulating at an exponentially higher rate. We see this chart going through the roof. We see a huge burst right here and then a continued melt up. And then in the meantime, what's happening with velocity? We see this die right here. This is our big burst. That was our big burst right there. And then this is our continued meltdown. So everybody's so afraid of all this inflation. The inflation, oh, it's going to cost so much money. Oh my God, everything, the housing market, the assets, the food, we can't afford anything. Oh God. What are these charts telling us? They're telling us that it's doing nothing. What they're doing is doing nothing. This was the response in money velocity. People are not spending. People have been spending at a slowing and slowing and slowing. And then here, everybody got scared and they completely quit spending. Velocity dropped to 0. And then they put all this extra money in the system and there was a little itty bitty spending. So why is that? Well, who spent money during that time? Poor people. All the poor people who needed the money run out and spend their money. But who got most of the money? Not poor people. The billionaires, the millionaires. You know, the regular people run out and spend that money because they need food and supplies and stuff. Rich people don't need to run out and spend that money. Think of that Scrooge McDuck cartoon from DuckTales back in the day. Scrooge McDuck just dumps a bunch more gold in his safe and then just locks the door and that's it. That does not create velocity. Poor people spending money creates velocity. People that if I give you $1 and you spend 20 cents of it and you put the other 80 cents in a coffee can and you save it, that does not create velocity. And that's what happens when you give rich people money. When poor people get money, they turn around and go spend it. This is what the poor people did, spent. So when everybody talks about the velocity and the M2 money supply and inflation and all this stuff, make sure they're paying attention to what's actually really happening. Because I think sometimes people lose, the forest for the trees. They hear somebody say, there's 30% more money. They're printing money like crazy. 50%, 20%, 30%, 12%. But is it doing anything? Does it matter? Sure, maybe it's temporarily driving up asset prices, but what if velocity is going down? That's going to decrease GDP, okay? So GDP has basically been dying since 2000 based on the velocity of money. So they have to fill that GDP with government spending and printing of money. That's how they fill the hole. They're plugging the hole with pieces of bubble gum. What has it done since 2000 here? Well, we just continue to go up at the same pace. And what is that? Well, it reflects in GDP, a regular growth rate of, 3% or 5% or 2%, depending on how you average it out. And now here we're saying, we're going to grow at 8% this year. GDP is going to go through the roof for 2020. We're going to be at 6%. We're going to be at 4%. We're going to be at 3%. Now we're down to, they're saying 0.5% estimate for the year, a half of 1%. So what they're doing right here, the increase in money supply, all the stuff that everybody's afraid of, is that the cause of the inflation? Is it to fix inflation? Or is it the cause of deflation? Or to fix deflation? Well, if you ask me, based on what we're looking at, based on all these different things, what's happening is there is a macro deflationary pressure. And by quote unquote printing money, and this chart we're looking at right now, they are filling the gap in GDP or the deflationary gap by increasing the money supply. A hidden tax basically. Without this, if this chart does not fix, if velocity does not start to increase and start to go up again, our GDP will slowly just continue to melt down to eventually, stagflation and then eventually deflation. So if you look at inflation based on GDP, stagflation or deflation based on GDP, well, if GDP is going up, which is what's supposed to happen because you have more people, they're spending more money, there's more goods and services, you have a productive economy, the world is growing, the United States is growing, that's great. That's what GDP is supposed to do. Go up a few percent a year, et cetera, et cetera. Well, in order to fix that GDP and doctor the numbers, basically, to make it go up, governments have been slowly getting bigger and bigger and increasing money supply so they can plug the gap in the velocity. Because if the velocity is not going up, they have to create more money and then put it into the system to make up for the lack of velocity from that same money. The reason being, what we talked about earlier. If I give you $10 and you go out and spend that $10 and pay for a cab, and then that cab driver goes out and spends, the $5 he makes off of that cab ride he gave you at, the local grocery store. And then that local grocery guy pays his rent and buys more groceries and fills up his inventory. And then, puts things back on the shelves, etc. The more times that dollar gets spent, that same $10 gets spent, the higher the velocity goes. And if it's 1 or higher, it means it's getting spent one time initially and then multiple times on top of it. So when it goes down and down and down and eventually goes back to 1 or less than 1, it means that every dollar they put into the system is creating less and less of effect, diminishing returns. So if we're not even over 1, depending on what velocity measure you use, in this case we're at 1.12, it means every dollar they put into the system is getting spent another 0.12 times. So it's not even getting spent, but an eighth of a time, 1/8. So everything else just getting put away. This is the problem. This is the problem that needs fixed, because this is macro deflationary. If the velocity is not moving, if it's not increasing, or at least going sideways, we have a big, big problem. And this is why I macro believe that deflation is going to be an issue. Now, but you argue, but grocery stores, the food is going up, the gasoline is going up. Well, that's all policy. That's all policy. Okay? That has nothing to do with this right here. We're mixing multiple things together. The reason that that is taking place, the reason that you're seeing prices go up on all these goods, well, we don't make anything, so we have to buy it from China. So now there's bottlenecks at all the ports. Okay, we know that. We've been predicting that. We've been expecting that. I was discussing that over a year ago. You shut down the economy, you stop people from making stuff, and then you fill the gap financially, because normally if you tell everybody go home, nobody can go to work. Nobody makes any money, therefore they don't spend any money because they're stuck at home. So there's your policy causing, basically a lack of goods and services being created. But that's not a problem because nobody's buying those goods because everybody's locked down at home. Oh, but wait. But if you give all those people money to fill the gap in their income, so they have money, and then you do, you can give people money or you can tell them they don't have to pay their bills. It's the same thing. They have more disposable income. So even if in the future they still owe those bills, all they're doing is pulling forward their purchasing power. The same way if you use a credit card, you owe that money in the future still, but right now you feel richer because you can go out and spend it. And then eventually you have to pay the piper. So that's what took place. So if you limit the amount of goods that are being produced because everybody's at home, nobody's going to work, and then you increase the amount of money in their pocket or their disposable income, even if it's still less, but because they don't have to pay their bills, their rent, their car payment, whatever, their student loans, they have extra money to spend, or maybe they're just not going out as much, wasting money on food or goods or services at restaurants or movie theaters or whatever, gasoline. They're just staying home. They turn around and spend that money on goods instead of services. They use that money intelligently. Well, again, you've created more bottlenecks because you're not producing enough goods. You're producing less goods because more people are not producing those goods by going to work. And then on top of that, you're giving people the same or more money. So then they're chasing after those goods. So we're seeing inflation take place. That's the inflation we're seeing. So then there's a limit of food because people weren't producing food. They had to destroy grains. There's floods. There's, droughts. There's all this different stuff. There's supply chain issues because we send chickens to China and then China processes the chickens for us and then sends them back to save money. Or we buy all our goods and they're made in, some Asian country or whatever the situation is. Those are all policy problems. That's not what's going on here. So we're seeing short-term prices are going up. Why did gasoline go up? Well, we shut down the pipeline. Well, so now we're not getting gas from Canada. We're not fracking. We're not doing all these different things. So now we're seeing gas prices go up. Those are all policy issues. If we didn't change anything and we just went about our business and everybody just kept doing what they were supposed to do and we didn't have lockdowns and people got sick and people died and it would be terrible, whatever, hypothetically speaking, it would be absolutely horrible. I'm not downplaying that by any means. But I'm saying hypothetically, if we just went about our business and kept doing what we were doing, sure, it might have been bad for a while, whatever, but we wouldn't be seeing the same increases in prices, in gas prices and stuff like that. Because these things would have kept operating how they were supposed to operate, minus some employees, some shutdowns, whatever. Okay, I get it. I totally get it. And I'm not trying to be heartless. Obviously, this was an issue. I had it. I know what it's like. It sucks. It's terrible. I'm healthy and, above average fitness. So I can understand how it would be terrible. I feel absolutely horrible for anyone that suffered through it. I still have effects. Totally get it. But I'm saying from a marketing, from a technical, from a supply demand, economic standpoint, had we not shut everything down had we not changed these policies on fuel and pushed towards green energy and shut down the pipeline and stopped the fracking, we would have just kept going the same way we were going. So if you take out all those changes, and here's a perfect example, is lumber. Okay, I spoke about lumber specifically. And what did I say about lumber? I said lumber is going parabolic because what happened? Lumber mills and, timber companies speculated that nobody was going to want wood, or they had to shut down because of mandates, or people got sick or whatever. So they stopped making wood. And then it turned out they speculated wrong, because they're not in the business of speculating. They're in the business of cutting down trees, turning them from timber into lumber so people can buy that lumber and build the stuff and build the things, houses and decks and whatever else they need wood for. But instead they speculated, or they were forced to shut down, depending on where you were or whatever, that nobody was going to want wood. Demand was going to go down. Nobody was going to have any money. We were going to go into a recession. There was going to be no housing built. There was going to be no demand from consumers. And then the opposite happened. So lumber went through the roof and spiked. And then, obviously hit a top, came back down, and then, is sort of fluctuating around there now. So it was the speculation and the policies that caused the issues. Had they just kept doing what they were doing, kept making wood, kept making lumber, kept doing their jobs, nothing would have changed. Even if we had a spike in demand because prices of houses were going up because of easy money and low interest rates, it wouldn't have been nearly as bad, except for that we had a supply chain constraint. We had a bottleneck in the system coupled with excess demand based on low rates. So again, the policy is what caused the issues. So let's make sure that what we're paying attention to in these markets and the macro global spectrum and everything, let's make sure we're focused on the big picture and what's actually taking place. Velocity of money is getting absolutely destroyed and then went parabolic to the downside. And this was the response by all that extra spending. From the blue line to the green line. This was the spending. This was the extra creation of money. And then we see the result in the velocity from it. It's dying. It's dead. It did nothing. So if they print another, now we're at 210. So let's say they print another 50%, add another 50% into the money supply, and we go to 315. And this thing just goes absolutely parabolic. It just spikes to the upside. What is that going to look like on velocity? What's it going to look like on velocity? If we print another 50%, what? It's going to go up to here? It's going to go to 1.22? And then what? It's just going to bleed back out? It's not doing anything. It's diminishing returns. So make sure you're paying attention to the actual big picture and what's actually taking place. Because you hear scary things like everything's going to be more expensive, inflation, you'll never be able to afford anything. But let's make sure we're paying attention to what's actually taking place on the macro scale and the global economy and GDPs around the world. And are we looking at the problem, or are we looking at the result of bad policy? So that's all I wanted to look at. I just wanted to talk about the correlation between those things. And I keep hearing people talk about all this stuff. Everyone's talking about money stock and the amount of money in the system and the amount of extra money they created. But no one is talking about the velocity. And the reason that they're creating the extra money is to try to fill the hole of the velocity. So until we fix velocity, money supply doesn't matter. Sure, will it cause more inflation if they print 50% more money and they just airdrop it to everybody, helicopter money? Is that going to cause issues in the system? Sure, because there's supply chain constraints, and then there's excess money, more money, chasing fewer goods. So we're making less stuff, and we're having problems getting the stuff to the places, and then we're also giving people extra money to buy those things, and it caused inflation. Totally for sure. But on the broad picture, we're not fixing the problem. We're putting a Band-Aid on a bullet wound, as I think it's Peter Schiff says that. We have a bullet wound. There's a bullet hole in our head, and we're bleeding to death, going to die, and we're just putting a Band-Aid on it. So, all right, let's keep rolling. So I didn't mean to go that long on that, but people are just so delusional, and a lot of respected, intelligent, smart, macroeconomic economists, all kind of people are talking about all this stuff, and it's like, do you not understand, or are you just pitching a narrative right now? because what you're saying is not true. It doesn't make any sense when you look at the broad spectrum of things. So oil, still just pumping, 83. I still expect this to go to 100. I expect a sideways consolidation, possibly even a pullback as low as 76. But, I mean, this thing's roaring. We did get a hard sell signal. Let's just look at our long-term chart. Of course, let me just move that over. I mean, this is what we've been talking about. We are back on top of the 200 simple, the 200 exponential, and both of them are sloped to the upside. We are at resistance right now. So while we would expect it to take some time to chop through this area, we will be up here at 100. And then after that, probably, you know, from 100 to 110 is not going to take long once we start chopping through this area. And then probably before long, we'll be at new all-time highs. But let's remember here also what we talked about last stream. This is 2008. Oil prices went parabolic. And then that was the crash, the housing market crash of 2008. Let's talk about right here. This is 2000. Oil prices went parabolic. And then this was the crash, the dot-com bubble burst. And what's happening right now? Well, CVD dump. And now we're going absolutely parabolic. How long can this last? Probably longer than people think. But what is the end effect going to be on these oil prices, on energy prices pumping? What is the end effect going to be? It's going to be a full-on market meltdown. The same way we had in 2000, the same way we had in 2008, and the same way we'll have maybe 2022, maybe 2029. I don't know. I mean, we don't know how long this is going to go on for. We don't know what different countries are going to do, etc. But what we do know is we are at dangerous levels already, and we're headed up higher fast. So it would not surprise me to see, and you guys know I have ridiculous price target, potential targets for oil, but let's keep in mind that as oil prices go up, more supply will come online. So we may, you know, you guys know I have, like I said, ridiculous targets up here for oil, but just a breakout above the previous high with our Fibonacci extension target from that high to, you know, basically our low. The 1.236 is 251. 1.382 is 332. 1.5, 428. 1.618, $540. Well, that's probably like there's hyperinflation going on if that's taking place. Do I think it gets there? No, probably not. But is it worth paying attention to? 100% is worth paying attention to, in my opinion. So, but let's just remember the last two times we saw those oil prices or energy prices spike like that, that was a big time crash. And this isn't a United States problem right now. This is a world problem that's taking place right now. So, you know, as where like the housing market was more of a, you know, local issue. You know, the dot-com bubble was worldwide, but again, mostly a local issue. You know, other money was in it. It wasn't just United States money in the United States stock market. But overall, you know, the tech.com bubble was the United States problem. So exponentially multiply that by what we're potentially looking at some point in time in the future. And that's no secret. Everybody knows this can't keep going forever. But does it mean we can't have a massive parabolic blow off top, like melt up before then? No, that's probably what's going to happen. So Dow Jones, all-time highs, at all-time highs. I expect it to continue at all-time highs. Let's look at our monthly now that it's closed here. Monthly, overall, we put in another green histogram after that red one. So that is good. We showed a little weakness, but, you know, we did close a green histogram. So that's good. We're up here at elevated levels on the monthly, you know, basically at like 95 on the stochastics. So again, very aggressive candle, bullish engulfing candle. Does this just keep ripping? And again, I mean, it's no matter what I say, I'm going to hurt people's feelings. If I say the Dow Jones is going to go parabolic, I hurt people's feelings. If I say the Dow Jones is going to collapse, I hurt people's feelings. I'm not here to make you feel good. I'm here to show you what is likely to happen. Okay? Our next target to the upside, based on the top back in February to the bottom, our Fibonacci extension, we already hit the 1.382. The 1.5 target is 37,600. The 1.618 is 39,000. The 2.236, or in this case, you guys know my actual target on the Dow Jones is basically the 2.618 of the macro, which is 51,000. But it'll never go to 51,000. You're delusional. Okay, whatever. Whatever. I always hear people saying the stupidest things ever. Why not? Why won't it go to 51,000? Crickets every time. S&P, same thing. New all-time highs, aggressively moving to the upside. Monthly chart, aggressively moving to the upside. You know, all but a bullish engulfing candle. Already tagged the 1.618. Where are we going to? Well, based on our macro Fibonacci extensions, 2.236 in blue and the 2.618 in red. You can't really see it because my box is right there. Don't be looking at my box, bro. 626. So, you know, what amounts to 6,200, let's say. So, but it's already at 459. It'll never go that high. Okay. All right. Could it crash way before then? Could it literally crash tomorrow? Sure. But I don't see any signs of it. Nasdaq, IXIC, same thing. Let's switch over to the monthly. All right. So we basically already hit our measured move from our last target. We're all but there. We were expecting just under 16,000. So we did it. I thought I had a NASDAQ target on here. I may have actually deleted this one. But if we just go by, that's our top from February 2020. That's our capitulation move, March 2020. We're already at the 2.0. 2.618 is up here at 18,695. So while the NASDAQ has moved more than the other ones, is it possible NASDAQ goes crazy and goes to 28,000? Sure, maybe it outperforms. But this is our next target, 2.618. So we'll see what happens. Again, strength here, still powerfully trending to the upside, you know, essentially at levels we've been at a couple times in history. But still strong. I mean, this was our 2000 top. Look at that histogram compared to this histogram. We are exponentially, parabolically higher than that. This was our 2007-8 stock market top for the housing crisis. Nowhere even close. Nowhere even near that. So, don't be calling tops just yet. We may still have a little ways to go, guys. The old Russell, still trash, not doing anything. Holding this blue support line perfectly. 1, 2, 3, 4, 5. We'll call that one time. So 1, 2, 3, and then our fourth time here perfectly. You know, headed back up here to the top of the range. 2,341 seems very likely. You know, obviously this is useless. Just doing nothing. Going sideways. But technically bullishly engulfing. As long as it's just trading in this channel, though, I see nothing worth paying attention to. We can't do this forever, though. This is our 4th month in a row now. Red histograms. This is basically 4 months now of just going sideways while the purple just keeps moving up here. So we're running out of room to the upside. Do we have to just sell off? No, we'll probably get a situation like this. We go like sideways to down. The purple keeps creeping up. Blue gets another push up here. And then eventually we get the cross down, come back up, get rejected after we exit the bullish control zone. And then we see a sell-off. But again, you know, the initial sell was right here. And then we continued to mount up. And then we put in that bearish divergence on a monthly. It lasted for another 6 months before we got that sell-off back in 2018. So there's plenty of time, you know, left that we could have. You know, this was 3 months down, and then next thing you know, boom, new all-time highs, continuation before the sell-off ever happened. So don't want to get too bearish on this stuff too far in advance. I honestly think this could just go sideways, and then just burst to the upside, and we could get that measure move. Do I think it's going to happen? Well, we have to see. I mean, the Russell overall, not that best place for, in my opinion, to be deploying capital. But remember, this is not financial advice. I'm not your financial advice. These markets are extremely volatile. Please do your own research and trade responsibly. XLB material sector got the breakout of the descending triangle up here right now, holding as support. If we hang out here long enough, I think we get continuation to the upside. Breaks out to the downside 66% of the time until we technically take out our C point right here at like 86.58. This is still, you know, technically just another lower high. But, you know, as soon as we take this out, we get a Tesla type scenario where we run up to the highs and then we just see new all-time highs. So does it have to happen? No. Are we losing some strength overall? Yes, but looks good. Looks strong. XLC communication, much less strong. Could not get the cross back up on the 821 here. Gap down, came back up. You know, starting to show a little strength, but getting a hard sell here. Basically getting some mixed signals on this. Nothing in particular coming off on communication. XLY, consumer discretionary, almost have finished the measure move of our breakout of the ascending wedge, and our target up here of roughly, well, just above 200. We're at 201 now, obviously at elevated levels. This is extremely bullish. Once we broke out of that resistance level, once we broke out of our ascending wedge pattern, the measure move was all but inevitable, and we have all but fulfilled the inevitableness of the move. XLE energy, the worst performing sector by far long term, one of the best performing sectors year to date. So keep in mind, we are still much, much lower than our previous all-time high, but with oil and some of the other, energy things, prices pushing this to the upside, as long as demand stays solid and price continues to go up, we would expect this at new all-time highs before long. We are seeing a sell-by-sell divergence signal leaving the bullish control zone. So is it unrealistic to think that we see a cool-off on this? Cool-off on oil, cool-off on, some of these other things? Well, it's possible, but keep in mind we're going into, we have the holiday season coming up, so we typically have increased demand. We have cold weather potentially coming up. So if we see a normal winter or colder than normal winter, we would see increased demand, and we could see some of this stuff go absolutely parabolic. If we have a warmer than typical winter, maybe we see the opposite effect. I don't think that's going to happen though. I suspect, again, I'm not a meteorologist. I don't know the weather. I didn't read any tarot cards or anything like that. I'm just giving you my opinion, but I would suspect that this is going to start bursting to the upside. There's a lot of resistance through this level as we basically chop sideways for year after year after year. But I don't think it's that unrealistic to think this is at $78 before long, as we basically just see this go parabolic into like the winter time. Does it have to happen? No, not at all. But I mean, we see what's happening with oil. We see what's happening with nat gas. What do you think is going to happen with everything else? In my opinion, further upside. XLI, industrial sector, still just kind of going sideways here. We have the macro, we have like the war of three channels going on. We have the sideways channel here. We're up near the top of it. Then we have our shorter term channel going back to 2020. And, we're basically at the heart line of that channel. And then if we zoom out even more, this is from like back in 2000. We have this gigantic macro channel going up here. And, we're basically up in the top 75th percentile of the channel. So we're in the top quadrant or at the top quadrant. So in my opinion, I think this would, assuming it stays bullish, assuming it finds support here and continues to the upside, I think it would be realistic to think we come all the way up to the top of the macro channel, which also lines up to the midterm channel, which would also be, preceded by a break of our short-term sideways channel, and some key Fibonacci extensions. I think 114 and then potentially a macro top around 122. Does it have to do that? No. All of this is based on probability. XLF, financial, all-time highs. We're seeing basically a little sideways to down action on the indicator oscillators, but we're at all-time highs. Looks like a bullish reset. Could we break down from here and retest some of these breakouts as support? Sure. I think 38.99. I think, 38.50, but they would be buying opportunities in my opinion, as this looks like it has further upside potential. And then, also, we always talk about financial. There's a lot of headwinds. There's a lot of tailwinds. If we see rates rising, we would expect financials to go up. If we see stock market rising, we would expect financials to go up. If we see, rates going down and the stock market crashing, we would expect financials to get crushed. If we see, Facebook and Square and cryptos taking off, as a headwind, we would expect financials to do less good or more poor or whatever. There's a lot of different things going on in uncertainty, but I don't think the banking sector just goes away overnight. Now, if they implement a Fed coin, I think these probably get crushed and they have to completely shift their business model and banks are just eliminated from the system. But do I think that's going to happen? Not in the next 1 to 3 to 5 years. Maybe 10 years from now, I would say there's probably a high probability, assuming that we don't get destroyed by a volcano or a meteor by then. Or the man himself from the heavens rains down a Sodom and Gomorrah type event on the world. XLK, technology, all-time highs, new highs, pumping to the upside. How is this possible? I mean, I have no idea. I don't even know. Because if we go through the tech sector and we look at like most tech stocks, they are still so far off of their all-time highs. Tesla at all-time highs, and XLK at all-time highs. Everything. Oh, and a couple semiconductor stocks, and Google, Facebook, Apple. Like a couple of those were like making all-time highs. The other 96%, it looks like shit. So I guess there's your answer right there. XLP, consumer staples, technically broke out of our little sideways channel here. But, I mean, we're at resistance now. We kind of faded that move at resistance now. I do think this breaks to the upside. We are gaining momentum. We're above the zero line. The slope looks like it's ready to flip. We're losing a little momentum on the stochastics, but still in the bullish control zone. The measure move would take us up to about 74. I think there's a high likelihood of that happening. I think there's a high likelihood of that happening. XLU. Got that pretty good bounce off of the bottom of our channel right here. Still looks strong overall, utilities. Again, we're at elevated levels, but we're barely off of the highs. We do have a little bit of resistance here from our previous two peaks. We took that out the first time, but failed to hold it as support. I think if we just chop sideways here long enough, we get the burst to the upside. And I think more likely than not, we see almost an immediate test, on a breakout 72. And then we probably get that move up here to like 81. So looks bullish. XLRE real estate, basically just, we're at all-time highs. Had a pretty big sell-off. Got scooped back up. The thing we're paying attention to now is, do we put in a lower high and then sell off, or do we see continuation? This one could go either way, in my opinion. I don't think real estate's going to melt down overnight. Real estate has gone up so much this year. Nobody's going to be upside down in their loan. Even if you put nothing down, but you bought a house and it went up 20%, you're still up 20%. So how are you going to get foreclosed on? Maybe as these programs roll off, maybe as the housing sector starts to correct, maybe as more supply comes on the market because people kick out all the deadbeat, squatters / renters, maybe over time, over the next year or 2 years or 3 years or 5 years, we see something change. We're seeing macro trends, more people living at home into their 20s, 30s, whatever, less people marrying, less people having kids, people that are having kids having less kids, more multifamily, living arrangements, like multi-generational families living together. So maybe some of the housing demand that people are anticipating is not in actuality going to show up. I don't know. There's a lot of people living in tents on the side of the road. I don't think that making more houses is going to fix that problem, if that makes sense. And again, I'm not trying to be like not sensitive to all the quote unquote homeless people, but probably their life decisions have put them in place. The majority of them, most of them probably have mental illnesses or drug addictions. So I don't think them just like building an extra couple million houses is just going to be like, oh, now I can afford to move in. Now I can buy a house. Probably not going to fix that problem with more houses. XTN, transportation. Back here retesting the highs. We were talking about this. It was showing some weakness. It was looking like a potential top and, could lead to issues in the stock market. We're seeing two big volume candles here, basically at these highs. So are we going to double top here? Or like I was discussing before, are we going to see this break out to new highs going into, the holiday season and then come around, January, February, March, something like that? We're going to see one of these macro tops. This is exactly what we were talking about. This was like a macro top basically in March of 2015, and it bottomed again in January 2016. So, and then here we had another macro top here, January 2018, and it bottomed in December 2019. So we're talking about like 1 year bear markets. And then again here, February 2020, and then that was our dump down to March of 2020. obviously, you know, fast recovery off that one. So is this just going to be another one of those situations where you put in a slightly higher high, slightly lower high, or double top, and then going into like January, come down here, you know, into March or something like that, or sometime from 3 months to 1 year from now, we see a bottom down here, you know, with a, I mean, we've looked at these pullbacks so many times, but I'll just mention it while we're here. You know, we're talking about, you know, a year and 35%. We're talking about, you know, depending on which high you go from, we'll just go from this one. You're talking about 26% and a couple months. And then finally, if we just go from this, what amounted to like a triple top, we're talking about, again, just a couple months, but we're talking about a 45% drop. So, you know, maybe we see a 25 to 45% drop over 3 months to 1 year, around somewhere between January and March. I think that is a very high probability for what amounts to, you know, and then also each time we saw that top, we broke down from a long-term channel, came back up, retested, failed, breakdown. Broke down from a long ascending channel, came back up, retested, failed, breakdown. And now here we are, long channel, came back up. You know, are we going to keep pushing back up, get the retest at a much higher level? Are we just going to double top here and sell off? Fact of the matter is, we see that same trend taking place where we break down from a long channel, get a failed retest, or like, you know, double top, whatever, and then breakdown. So that is what I'm expecting. But again, that's just based on the charts, not based on how I feel and my feelings. Jets ETF, talking about the plane, breaking down from a key support level, you know, acted as support a bunch of times, and now here we are losing the 200 exponential and simple. Slope is rolling over to the downside. You know, do we get that measure move? I think we do. This can be very difficult for this to recover. And let's also remember how much money, first off, we have put into the airlines recently, and also that the macro high was in January 2018. This thing has been slowly just bleeding out since January of 2018, and then it capitulated. We faked a recovery. We pumped money back into it to try to get a recovery, but in all actuality, what should have happened? Consolidation. A bunch of these airlines should have went out of business. We should have restricted flights to different areas because demand was not there, stopped supplying them because it wasn't profitable, and then over time, let the actual free market do what it's going to do. But instead, we manipulated it, pumped the price all the way back up, and now we're probably just going to see it bleed back out. Hail. Again, the mobility ETF has broken down, 200 simple rolling over. We're hanging on to 200 exponential for now. We had this like descending triangle or wedge, sort of breaking out of it to the upside. Again, key level to break above will be 65, but that's still way above our heads, you know, over like 12% more to the upside. I think this is the area to pay attention to. If we get above 60, start consolidating, I think we almost immediately get a retest of like 64, 65. Again, seasonally, I'm looking at that too. We'll take a break in a second here. I just want to do UPS and FedEx first. So obviously UPS played out beautifully. We were expecting a gap close of this from here. We got the breakdown. We came down. We filled the gap. We left a gap again right here. We were expecting a gap close and trade set up 15+% to the upside. Came back up here, filled the gap technically, but again, we just left another gap right here again. So in all actuality now, we filled the gap to the downside. We filled the gap to the upside after we fill the gap to the downside. So now in all actuality, I think it's just a matter of time before we come back down here, fill this gap as well. I think that the weakness in FedEx and also the fact that the United States Postal Service is trash, UPS probably going to do very well here, especially going into the holiday season. So I do expect, even if we do get this gap fill right away, I expect continuation. If we don't fill the gap right away, I expect continuation and then eventually come back down and fill the gap. Could be a breakaway gap. Maybe it never fills. Maybe FedEx goes out of business. I don't know. FedEx on the daily, you know, the move is slowly getting up there. We left a little gap back here, much less strong of a move. Still grinding our way up. The 821 have crossed back to the upside, well below the 200 exponential and simple. Both sloped to the downside. So while I do think that eventually we get a push back up here and fill the majority of the gap, I think FedEx is probably going to the downside. Also, I don't know if anybody else getting messages or seeing any of the stuff going on with FedEx, but they are having serious issues, all kind of warnings about delays and, you know, problems and this, that, and the other. And they're blaming it on, you know, not enough drivers in certain areas, not enough blah, 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 blah. Well, UPS managing to do something right. So I don't know what they're doing wrong, but maybe they need to copy UPS. So, but yeah, overall, looking at those, get a pretty good idea as to what we're paying attention to, have a broad scope on the market and what is taking place. And do we want to just take a quick break? Anybody in chat wants to cut up for a minute before we take a break? Any questions, comments, anything? Do you guys have any special requests for when we come back if we do take a break? Guys are pretty quiet today. I'm not going to lie. It was good to see Bollypur pop up in there. I have not seen him for a while. Not really sure what he was getting at, but go for a drink, broski. Oh, yeah, I just took one. Yeah, it was definitely nice and quenching. Oh, it's only 9. I honestly thought it had been longer than that. I felt like I went on like a pretty long tirade there at the beginning. What's up? Good to see you guys, man. Bubblies and our kits in the house. Good to see you guys. Always good to see you in the chat. Appreciate y'all. The interactions and whatnot. Let's see. Should we rip through crypto? I kind of want to do a little more in-depth on crypto. I do have a Bitcoin and Ethereum video coming out for you guys in the group for basically like super bullish and super bearish situations, probabilities, and price targets, short and long term. The crazy thing is I expect both of my targets to get hit. And when I say both, I mean to the upside and to the downside. Just not sure about the order. I don't know. It's a strange situation. Good to see you, Edward. Appreciate the compliment, my man. Great first half content. Can you look at Coinbase and MGM when you get back? Yes, sir. I have both those on the list, and we'll 100% take a look at those. For sure. All right. Should we do one more quick set here? What do we want to look at? Let's look at our metals and miners. I think those will go pretty quick. We already kind of took a look at gold. You guys, I got a pretty big in-depth look at gold in the beginning. You guys know how I feel about gold. And then let's just look at the monthly real quick and see what is this telling us. And does it look familiar? Does this look like this? I mean, it really does. Hard sell, sideways to down, lower high, breakdown, hard sell, sideways to down, lower high. Did we already get the lower high? Are we going to put in a lower high and then break down? I don't know. I mean, this monthly candle is bad in my opinion. A monthly candle at or above the 8 would have been nice. A monthly candle below the 8, in between the 8 and the 21, just telling me we're just tightening up. If you're Peter Schiff, we're coiling up for a breakout. If you're anyone else, we're coiling up for a breakdown. Then don't get me wrong, I love Peter Schiff. Like, I honestly think he's got a pretty good grasp on things overall. He just doesn't really understand technical analysis, and that's why he gets crushed in the whole gold space. If you try to understand what people are thinking and what people should do and what markets should do, and you trade based off that, you'll go broke. People are stupid. Markets are stupid. They don't do the rational thing, ever. Looks weak, though. All red histograms broke below the blue slope line. Blue slope line going to flip over red here before long. What does that look like? Well, it looks exactly like this. Right before the breakdown. Right before the capitulation move. Right before the last time. Let's just say from, the middle of the zone to the low. We're talking about 1,064 days. So we're talking about 3 years and 36% to the downside. But the system, the hyperinflation, the money supply, real money, currency, garbage, inflation. I mean, so you just think our system ends tomorrow and then gold goes to the moon? Or you think maybe people stop getting scared of inflation? 3 years go by, gold gets crushed because there was no momentum in gold while everything else pumped to new highs. Maybe everything else keeps pumping to new highs and gold gets crushed. And then eventually it bottoms out and then it goes parabolic as the system collapses. I think that seems more realistic. I think the current system has still got a long ways to go. Whether it's 3 years, 5 years, 10 years, still got a way to go. Silver was able to bounce that inverted head and shoulders, as we discussed, that fake breakout, that false breakout, but came back up, just got rejected at 200 exponential, 200 simple and exponential, both angled to the downside. Could we make it up here to like 25.40, that heart line, and break back down? It's possible, but I mean, this thing is looking weaker and weaker. The longer it doesn't go up for, the more likely it is to go down, in my opinion. You know, just turning off the drawing tool here. Same thing. This monthly candle barely was able to save silver from what amounted to a breakdown below the 21. But we just got rejected right back at the 8. Now, but it's a bullish engulfing candle. Sure, it is technically a bullish engulfing candle. We did technically reclaim a key level. But, I mean, did we just do the bare minimum? Did we just swear 21 pieces of flare? We did. We did the bare minimum to keep this from being, you know, a capitulation move to the downside. So does that make me overall bullish when we're doing the bare minimum? No, probably not. Probably not going to win Employee of the Month with that one, silver. Sorry. Gold-silver ratio, still doing exactly what we discussed forever. You know, below the 200 exponential on silver, gold started to rally. We were bullish on gold back here at the 821 cross on the weekly. Came all the way back up. Now getting rejected at the 200 exponential, recouping off of the 21. I do still expect continuation. I do still expect this to move up slightly higher, anywhere from like 85 to, let's say like 88, 89, somewhere around there. Platinum got the initial move up, the break of the descending trend line, measure move, trade setup, hit, came back down, trying to hang on to this level, but let's just remember, platinum looks absolutely horrible. We only have one touch on the bottom here. We have a decent amount of price action on the heart line, and then 3 touches on the top right here. We did reclaim the 200 exponential technically, but I mean, this just looks so bad. It basically got rejected at the 200 simple, barely hang on to the 200 exponential. I would not be surprised to see platinum much lower. We really don't need to do a deep dive on these miners. First Majestic rejected off the 200 exponential. Looks like it wants to see continued downside. It looks terrible. Looks terrible. Closed below the 21. 8 and 21. It's too close to crossing on the monthly. Showing extreme weakness. This thing probably has some serious downside potential. I mean, this fake breakout or failed continuation breakout right there basically invalidated the 5-wave structure potential move of the breakout. And I think now, more likely than not, First Majestic is going to like $8 or something like that. Could something change before then? Is that going to happen overnight? No, it's probably going to take months, but it does not look good. Silver Junior is basically the same chart. First Majestic and Friends, same thing. USAS trying to get a bottom off of this long-term, support line right here. But I mean, this is like the underperformer of the century, and it looks very tired right here. It looks very tired at resistance. Could see some continuation. I'd like to see it do some kind of burst up here to like $1.18, but I'm not counting my fingers on that one. Tilbury pot stocks look absolutely terrible. Very, very weak. 200 exponential and simple rolling over on the daily. Monthly just looks like a massive rejection off the 21 perfectly. And now we are well below the 8 and 21. I mean, we're around support here at like $10, but I think I have a target for this at like $7.50. But we got to see some kind of divergence get put in on at least like a daily or weekly before I expect any kind of bottoming pattern. ACB, again, absolutely terrible. Below the 200 exponential and simple on the daily. The monthly, we could not even close above the 8. Still looks terrible. Again, at support, would I be surprised to see ACB at like $4 and then put in some potential divergence and then that's our bottom? I mean, these things underperform worse than gold. So would not be surprised to see further downside. CGC, big acquisition. Has it helped the stock price? Not yet. Could we see some kind of pop off of that, off of earnings? Did they buy that just to kind of fudge the books a little bit on the earnings? Who knows? Only time will tell. But I mean, realistically, like $9 for this thing. We got that wick down initially. It got bought up pretty aggressively, but I mean, looks terrible. No strength. Monthly looks weak. I expect continuation. Uranium stocks, basically hitting our level perfectly here, putting in some bearish divergence. I think we're putting in a temporary top here. I do expect it to get bought up aggressively again at 21. That is URA. We don't even need to look at the monthly because we're just pumping. UEC, same thing, sold off, finding some temporary support right here. Bearish divergence between these 2 points. Again, I think this aggressively gets bought up probably somewhere around 289 if we get there. CCJ, Cameco, same thing again. Basically putting in bearish divergence. Do we get another high on any of these and then see a third drive of bearish divergence before a sell-off? Definitely possible. Definitely is possible. Should get pretty good support at about $22. URNM, this one double topped, but again, putting in some bearish divergence. Same thing, potential 821 cross. Again, I would expect support somewhere around like $75 there. That is North Shore. Copper, basically lower high top right there, which is exactly what we expected, exactly what we discussed. I think that what copper and lumber and oil do is going to tell us legitimately what we're expecting as far as like, industrial and whatnot. Remember, interest rates are the cost of money, and these commodities like oil and copper and stuff like that, steel, cement, those are like the cost of doing business or creating real life things, not just bitcoins. LIT breaking out, lithium very strong right now. Keep in mind I'm very bullish on these things long term. Hydrogen breaking out right now, very aggressively. Wouldn't dare but call a top on this one. But again, I think these are just speculative plays right now. LBS1, lumber, it's just finishing out that head and shoulders. Been talking about this whole time. Basically hit our move perfectly. 76% move to the upside. We met up 75. So I was off by 1%. And now we're just rolling over, dumping back down. Hard rejection off 200 exponential and simple. What happens down here at 453 is what we're paying attention to. But Wood'll never lose another $180. Well, yeah, that's what you guys said up here at 1375, and we lost $900. So pretty sure we could lose another couple hundred. Yeah, so that's what I'm paying attention to. That's the level that's worth paying attention to. Caterpillar got the retest of the 200 exponential, closed at it, got a nice little push up here. Overall looks decent on the daily, but when we switch out to the monthly here, that basically looks like the bounce off of the 21 and a rejection at on the 8. We need to see this get back on top of the 8. Otherwise, it's going to start looking like this, and we'll expect further downside. Keep in mind, we did break down from that key channel, and then we went sideways and then sold off, break up, nice channel to the upside, break down from it, push up, lower high, and then sell off. I think that's probably what's going to happen again. We will have to wait and see. A couple more, and then we'll take our break. Deer. Again, just chopping around between the 200 exponential and simple. Slightly more bullish overall. This thing looks like it actually wants to come back up to retest the highs. AM, Antero Midstream Corporation, retesting this previous resistance as support. 821 getting ready to cross to the downside. If we don't bounce this area, I think we come back down to 200 exponential and simple. If we do bounce it, new all-time highs. Cemex. Breaking down below 200 exponential and simple. This was our retest and break of the 200 exponential. This looks bad. It looks like it wants to just let go. If it does, it's got quite a bit of support along the way down, but not good. We do not want to see this. It's breaking down from that channel, in another channel, and then we're breaking down from the descending channel. I would expect these key filled levels and our measure move, low $5. CLF, retest of those highs right here. Nice little move back up. Steel and iron ore obviously having a aggressive move off the 200 exponential and simple. No surprise there. That is basically what we were expecting. Definitely got that gap fill and then a push back up. We'll have to see what happens after that. But overall, American Steel does not look bad. So Ford, all-time highs. I expect continuation. Yeah, you guys know how I feel about Ford. No surprises here. We did break down from a key channel. We are basically retesting it now, though. We are at key Fibonacci levels as well. That's our 786. Actually, not all-time highs, cycle highs. But I would expect at least temporary, like, top at this resistance area here, come back down and sort of go sideways for a little bit. GM, slightly weaker, but overall just basically doing the same thing, but not quite as good. Hasbro, aggressive move back up here, trying to reclaim the 200 exponential and simple. Still feel the same way until we get a breakout and consolidation above $100. I'm still bearish on Hasbro. We'll see. Could be good going into the holiday. Did well on earnings and dividend. Just paid out. Typically, though, after earnings, after the dividend, typically sells off. So after earnings, after the dividend, sells off. After earnings, after the dividend, sells off. So what do I expect to happen? Probably sell off down to our target here that we sort of front ran last time. Works still to the downside as expected. Just waiting on that one patiently for an entry. Any sphere, same thing. Patiently waiting on this one. We're at the top of the channel. I expect it to come all the way back down, retest our resistance as support, and put in our right shoulder here, at which point in time we could definitely see a very aggressive, very big move. But until that happens, we could easily lose another 50%. So I have no interest in rushing back into this. I'll potentially consider it about the heart line and 200 exponential and simple. Walmart back up here at the all-time highs again. What did we say? Walmart is basically the gauge of the poor/working man's economy in the United States. So if Walmart starts breaking out to new all-time highs, hey, people must be doing all right. So looks okay for now. Are we just putting in a triple top? I don't know. It looks more like an ascending triangle at this point in time, which technically is a bullish pattern. So a break above like these key levels here at about 150, probably going to give us a nice aggressive move to the upside. Probably corresponding with the holiday season, as people are not able to afford nice goods. So instead, they buy all their Christmas presents at Walmart. WMC, sorry, that's not funny. WMC, Western Asset Mortgage Capital Corporation, just potentially looking at that move up here, that 18% pump. Again, I'm not in this one. I'm not involved in this one, but a long-term breakdown from that ascending support lines up perfectly with 200 exponential and simple, and then further downside looks likely. But again, not interested. MGM for you here, my man. MGM, up here just crushing it, consolidating, showing a little bit of weakness here at the top of the range. Losing the histogram below the slope line here, still blue, coming out of the bullish control zone, hard sell. Looks kind of weak here. I wouldn't be surprised. Realistically, the best case scenario for continuation to the upside is a retest like $42. So we come back down to like $42, $43, continuation to the upside. Maybe we don't even get there. Depends partially on earnings. Still got a little time. Looks good though. Honestly, looks good. And then last one, and we'll take a little break. This is Mark. I can't remember who asked me to take a look at this. Remark Holdings. But boy, did we literally just hit that trade setup perfectly. I hope you took profits on this one. We had the bottom support on the channel here. We had the top resistance here. We got basically the push up above the 200 exponential and simple. Put our trade setup in place here. And it went absolutely fucking nuts. If you got to take... Whoever this was, if you were in this trade, man, congratulations, because I wasn't even looking at this. But with a 4.7 risk-reward ratio, it literally pumped straight up in a single candle to our target, 229% in a single daily candle, and then just bled back out to the entry again. So if you had an option to take profit at 20%, 50%, 100%, or 229% up, congratulations, my friend, you did it. If not, and you just held it the whole time, well, hopefully you learned a valuable lesson about taking profits. So Let's take a quick break here. This one cracks me up. 229%. Whoever brought that one up, say something in the chat. You deserve some props. And hopefully you took some profits and you deserve them dollars in your account. So, all right, let's take a quick break and be back in like, I don't know, 2 minutes. All right. All right, let's keep rocking and rolling. Just a reminder, if you are just tuning in, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Let's take a look at crypto. Yeah, so basically nothing has changed here really. On the daily, still just chopping sideways, hanging on to the 8. We are seeing a bunch of red histograms. We're basically at the area we would expect to bounce. Basically, when the histograms get to the slope line, we almost always get some kind of bounce. We did not get one here, but we did see basically a sell-off slightly below and then a push to a new high. So we also saw a key level, 200 exponential, back above the 200 simple. And while somehow the 200 simple is still rolling over to the downside, all we have to do is basically just stay up here. Matter of fact, all we have to do is stay above 45,000, and this is going to flip back over blue before long. And I do expect that to happen. Is it possible we get an aggressive retest of that level? Sure, definitely possible. Do I think it's likely? Probably not. I think it's just going to chop for a little bit, and then we're going to see continuation to the upside based on momentum. Weekly looks good. Bullish control zone. Green histograms reclaim the slope level, at all-time highs. And then if we switch over to the monthly, again, that's our record monthly close. No reason we wouldn't see continuation. We do still have the blue stochastic below the purple stochastic. So when this does roll back over and comes up here, I'm going to be very cautious at this level that we don't see something like this, where we see a retest and rejection and then continuation. That happens very often. And in this case, the retest was like this push up here. So while this was a lower high, we could easily get a higher high right here and put in some divergence. So while I'm not expecting that to happen right now, I am paying attention to it just in case. Let's switch back to our futures chart. On the daily, still looks okay. I mean, it looks like a bullish reset as far as I'm concerned. We got a perfect retest of the 21. If we look at our monthly new close, same situation though. Blue stochastic is below the purple. Looks good. I think we're going to see continuation. I really do. Probably into year end. Let's look at this is a Coinbase chart, just looking at our traditional indicators. Stochastics, right at like the neutral area, just kind of chopping around, not surprising. The RSI, about 60, just kind of going sideways, nothing to see here. And MACD, putting in a couple of our lighter colored histograms, trending down after that cross. Basically just looks like a bullish reset on most indicators. The longer we go sideways, the more likely we are to go up, in my opinion. Monthly chart, got to be careful this doesn't roll over here. We do not want to see like a third lower high on the blue Stoch, but looks okay. RSI looks okay. I mean, MACD is at like ridiculous levels, but no divergence or anything. On the actual histogram, we have a slightly lower high, but there's no sign of like it topping out right now or anything, so we don't have to really worry about divergence. Everything looks good. Looks good for continuation, as far as I'm concerned right now, based on indicator oscillators, which are, of course, lagging. Ethereum broke out, got the new all-time high, just consolidating at those levels. Essentially just want to see these levels hold. If they hold long enough, I think we just go up. Same thing, I would expect a bullish reset on Ethereum, followed by continuation. Yeah, looks pretty good on the weekly. Nothing really to see here. The problem with Ethereum and Bitcoin is like, as long as people are bullish, no one cares about Bitcoin and Ethereum. Everybody's just all about those shit coins. So, the stronger Bitcoin and Ethereum are, the better the shitcoins are going to perform, and the worse Bitcoin and Ethereum are going to perform in relation. Ethereum on the monthly, I mean, looks great. Like we said back here, we got a new weekly all-time high. So, continuation, and we have seen that since then. Blue stochastic, same thing as Bitcoin. It's trying to re-enter into the bullish control zone. All green histograms. Looks good. Looks good. ETH Bitcoin ratio, essentially just chopping through, same thing. Just our channel just playing out the same way. We basically had a descending channel here, broke out of it, measure moved to the upside, formed our triangle. Again, ascending channel here, break out, measure move to the downside, found support at 200 exponential and simple. And, one could argue that the same thing has happened once again. What do I want? Yeah, channel tool. And we basically can see I don't love any specific position. I think that one's probably the most accurate. We had like 3 tests on the top right here. The 4th test, we had one on the bottom. And then this one here and that one there. So, basically had a key level. Saw quite a bit of support and resistance at the heart line. And then, of course, once we broke out the top of the channel, we would expect the measure move once again to the upside, which, all but takes us back, and this is what we've been expecting. Obviously, expecting support to act as support and resistance to act as resistance. So again, we expect a slightly more bullish look on Ethereum in relation to Bitcoin. We see the blue slope line flipping over, all green histograms, bullish control zone. Looks like we probably are going to come back up here to the top of the range. And will we break out once we get up to the top? Probably not. Statistically, no, we will not. We will top out here and then come back down to the bottom again, at which point in time, do the same thing over and over again. So not quite enough info right now to put a channel in place, but I suspect we'll get another one of these same old patterns we've been getting. Total market cap on the weekly looks good. Bullish control zone, all green histograms. Don't even need to look at the monthly because we know it's just all bullish. Bitcoin dominance, basically trying to hang on to the 8 again, got that push back up. Looked like we were bottoming here. Bitcoin started moving up in relation to alts. And then once again, no one is afraid. And until people are afraid, no one's going to buy Bitcoin. They're just going to buy shitcoins. And the majority of the people that are new in the space right now are 99% in shitcoins, 1% in Bitcoin. I think this is probably the worst speculative fervor we have ever seen and probably will end horribly. But by then, will we all be much, much, much more wealthy? Yes, we will. Because we will fully take advantage of all the dumbass people, stupid ass money, and rampant speculation. And I have no problem with that. I don't wish the worst upon anyone, but at the same time, if you want to be a dumbass and speculate, in dumbass shit cryptos that are total garbage, I will 100% take your money. Speaking of dumbass shit speculation crap garbage coins, SHIB crushing it. Beautiful move to the upside here. Topped out like basically perfectly at 0s and then 9. Sold back off, finding support at the 8. Pretty much got to go to a shorter time frame to even see anything on this. Was able to save that 821 cross. If we basically just consolidate here long enough, I think we get a push back up to 0s and then 7-6. Looks very, very likely. I mean, I don't have to tell you guys. You already know. As soon as we broke out of this trash bag triangle right here, well, I mean, what was that at? 3 zeros and then 3. And then it's gone absolutely parabolic since then. Basically overshot the 1.618, probably right up to the 2. And now here we are just consolidating at the 1.618. So if we consolidate here long enough, I mean, I don't know what the percentage moves on this is, but it's only 10%. I mean, I don't even get out of bed for a 10% SHIB move. Back to the highs, 25%. Man, is this thing just going to end up being another Dogecoin? I mean, it looks bearish on the 4-hour. Below the slope line, red. I don't know. I mean, there's no risk reward that's worth it now in SHIB because it's already moved so much right now. It pretty much has to just consolidate for a bit before I can even touch it again. I mean, of course, I left like millions in SHIB just because they're worth nothing. And we've made so much on this stupid garbage coins. If anything has changed from Dogecoin and SHIB and all this garbage, is like, honestly, I was never a fan of Shiba Inus in the past, but I gotta say I'm kind of warming up on them. I mean, they're kind of cute, and the gains are definitely very cute, so can't be mad at them. Would I ever get one? No. If I saw one just walking down the road, though, would I kick it? Meh, probably not. Solana, back at all-time highs. Looks like it wants to just keep creeping up here. It's just so overvalued right now, in my opinion. I can't really touch this. As far as like adding to positions. I mean, but realistically, where is this thing going? It's probably going 250 and then realistically like 317. There's definitely an argument to be made for this. I mean, just a daily close above 209 is like another 20% move. That's what I'd be looking at. And then if we took out basically like this support on a close, I mean, 19% to the upside, 7% to the downside. You're basically just taking a continuation trade on the breakout close. 2.5 to 1 risk reward ratio. I mean, this thing is like got another cult behind it. So honestly, this is probably a very good trade. 51% to the upside. Again, same stop loss, or you could even argue, you could even put, a close based on taking out these lows right here. A stop at 185, 12% stop loss, 51%. I would go based on candle closes because you don't want to get wicked out on some shit like this and then it runs. But I mean, realistically, remember, it's not financial advice or metro financial advice. Markets are extremely volatile. Please do your own research, trade responsibly. Solana is not worth this amount of money, but is it a better value than all these other trash bag shitcoins that are overvalued? I mean, yeah, it probably is. But again, is it the cleanest shit-stained underwear? Probably. Polkadot, consolidating here. It's holding solid. Can't be mad at DOT. Does it see continuation? Same thing. If it breaks out above like 45, all-time highs on the daily, and then I think it sees that continuation. Still kind of short of our target here. Does it get there? I mean, I don't know. All this just depends on what Bitcoin does with a little splash of Ethereum. The truth is, if Bitcoin just doesn't sell off, these shitcoins, especially the culty ones, are just going to keep popping off. So $50. I don't know if there's a trade setup there. It's like 10% to the upside. You could just take a momentum play right now if you wanted to. But again, I mean, there's probably just a lot of these ones that have already run. I'm like taking profits on. So the last thing I want to do is be like adding. I mean, you could take a super tight stop, or you could take a relaxed stop down here, 674, 6.74% to the downside, 17% to the upside to hit the 1.618. You know, it's still over 2.5 to 1 risk reward ratio. Buying into momentum on a pretty culty, like popular coin with actual legitimate technicals and fundamentals. Again, is it overvalued? Oh yeah, yeah. There's definitely shit on this underwear, but you know, hey, if you're digging through your laundry basket, you need some underwear, and you only got, you know, Dot and Soul, and you got to pick between those two. Could go either way. So I mean, it's not that XRP, that chart. Matic, I mean, it had a beautiful run, overshot our target like substantially. From the entry was actually back here. I mean, that thing just went ballistic, but could not close above the 786. But does it just chop around here and then get the continuation to the 886? I mean, it probably does. You know, it's just closing back up here. I mean, this thing's realistically, the 886 is the all-time high close. So this thing probably is about to go parabolic, honestly. And I feel like for whatever reason, people want to buy cheap stuff, and this is like $2. So I feel like, honestly, God, this thing's probably about to rip. 5%, 30% upside to the 886. Plus the books have basically been cleaned out on that push up there. I don't know. I'd have to look at other exchanges. But on Kraken at least. A lot of times once you get a wick like that, it looks like a rejection. But in all actuality, it was just somebody fat fingering, not realizing how illiquid like this exchange was. 53% back to the all-time highs. And then, I mean, if this thing even just starts really ripping, I mean, they're going to have to change their name from Matic/Polygon and just call themselves like Shibatic or Shibaligon or Matic Doge or Doge Matic. Doge Matic? That could be good. If you make that coin, I expect my share. 122% to the upside for the 1.236. I mean, this thing could just rip. Let's be real. I mean, if you were going to go for like the all or nothing trade like that, though, I'd want to put my stop loss below the 618 and say if we lost this area as support, I want to get out on a daily close or a 4-hour close, 16% downside, 122 upside. I mean, that's like an 8. That's 7.5x. So, I mean, this one probably has one of the strongest arguments. And again, you know, there's potential for it to actually be like a real crypto. The BAT trade played out absolutely beautifully. Absolutely beautifully. Everybody in the group knows that I got out at the 886, just above $1.40, at which point in time it completely capitulated. This to me looks like a pincher top. We're up like over 100% in like 2 days on this. To the 886 was 92%. Depending where you took profits on that. Yeah, that's best case scenario always. And the specific reason that I said I was getting out of this is it always has pumps and never can hold them. Is this a buying area to reaccumulate at a buck? If $1 holds right here, yeah, I think it keeps creeping right back up here. And again, strong fundamentals, technicals look, yeah, okay. Look a lot better now. But if this 618 holds, that looks pretty nice actually. You know, and then without getting too crazy, you know, are we looking at something like this? Let's look at some percentages and some levels. 51 cents. 93 cents. So if we expect the 5 to be somewhere between 50 cents to $1 potentially. Let's see what we did here. This thing was trading so technically. A perfect pullback to the 618. Okay. Let's remember that. And then after that, let me make this a little more accurate. Kind of in nowhere land here. I mean, technically at the 382. If it comes down to the 618 though, it's going to look like it's invalidating by taking out the 1. Now, depending on what time frame you're looking at, on the weekly, that's probably fine. But in all reality, I don't want to see this come down below the 0.5. Realistically, the best case scenario is it holds right here and it was just a 1-day correction. I don't think that's likely. I mean, it could easily just chop sideways here and go slightly lower. But that looks, I mean, it looks like it has some potential. And then again, let's just kind of, whoops, wrong one. God, whenever they changed the fib and the trade setup, it like always psychs me out because the picture looks the same. And when I'm not paying attention, I just like click the wrong one all the damn time. Let's just assume it comes down and retest the 1 and we get a 5-wave structure kind of like play out there. Let's look at our fib extension tool and see what it looks like. That was basically perfectly the 1.618. So do we get another move to the 1.618? And then we said what? Roughly 50 cents to $1 from 93 cents to $2. Yeah, I mean, that's like, seems very likely, or at least possible. Ready or not, here I come, gonna find you. Yeah, so we'll see. I'm gonna keep my eye on BAT. I'm not like giving up on it yet, but I'm also not gonna ride it back down, 33%. Yeah, buddy. But the majority of my position is closed out. I may re-enter here, but I don't know. Locking in those profits, bros. That's what it's all about. Looks good, though. It could definitely see continuation. Chain link. I mean, underperforming right now. But honestly, 200 simple looks like it's ready to flip back over. It's back on top of the 200 exponential and simple. Blue slope line. Bunch of red histograms and a hard sell signal. But just a consolidation at this level. And I can start getting bullish again. I mean, realistically, I want to see it take out 35 bucks. I think I closed my chain link position. I mean, I probably have some chain link dust, but I don't think I actually have like an actual position in chain link. Might be that time, ladies and bros. Bros and hoes. Yeah, that's a tough one. I mean, there's nothing particularly. Yeah, there's not like really a great entry or anything right now. I mean, you would have to basically say a breakdown below the 0.5 and you wouldn't want to be involved in this. But realistically, that would be a tough resistance. So we're basically in the middle of the range. If we did get the break to the upside, that would still only be like a little over 2-to-1 risk reward. And you're basically flipping a coin just to get to the first resistance. So there's nothing really here for me right now. If I can get it at the 0.5, if it pulls back down here to like 26, 27, I'll take a position from there. But I mean, I don't know if that'll happen. It might just run away on us and we miss it. But again, I would rather get, I mean, you guys know how I feel about this stuff. I'd rather get something like this, get it back down at like 30 bucks and, or wait, what is that? Sorry, it's not 30. Get it back down at like 27 and then you got a 3-to-1 risk reward, almost 4-to-1 risk reward, just to get back up to the resistance. So that looks way, way more probable to me. Now we could argue there could be something here though. What is that? What's that little guy? Hey there. Hey now, where were you hiding? Okay, maybe we just chop sideways here and then I start to get a little bullish. If this chops sideways long enough and just holds that green support line, there's an argument to be made for that. There's an argument to be made for that. But again, I mean, I'd rather be a little more conservative. One of these trash bag cryptos or cryptos with strong fundamentals is going to pop off. Might as well just take the easy one. Don't need to push it just because it's chain link. Uniswap, it doesn't look particularly great. Hanging out between the 200 exponential and simple. Really want to see this reclaim like $26. At which point in time, 31 looks probable. Barely hanging on. This one does not look great. Nervous. Oh, you know which one I did mean to look at is Pancake Swap. I feel like we haven't looked at that for a while. I was looking to potentially re-enter at some point in time. I have not paid attention to that in a while. Nervous. I want to say this thing's just been doing what we've been expecting for a while now. Yeah, okay. So we got that move back up here perfectly to resistance. Basically topped out at our sell area, came back down to the heart line. And then I think we were talking about, damn it. Not enough memory. What the F? Might be overdue for a reboot, ladies and gentlemen. Oh no, I've been like putting off a reboot on my computer for weeks. Damn, I might actually have to reboot. Hope this isn't gonna cut us short. FTT. We had that potential trade setup in play right now. Hasn't really done anything. Slightly below the potential entry we were talking about, but I mean, realistically, 2-to-1, that's a big stop loss though. Looks okay. Yeah, again, that's got to be like a hard pass on that one. XRP, man, talk about the worst crypto. Talk about the underperformer of a century. Like, if you're in the XRP cult, why don't you just quit and literally join any other cult? Come on, guys. Just give up. Give up. Unsubscribe. I can tell who unsubscribes and which cult they're in because, like, whichever coin I go hardest on, I'll, like, see afterwards. I'll get, like, a couple unsubscribes, and I'm like, I made fun of your girl. I called your kids ugly, and you got mad. Don't get emotional. That's my emotional gauge. My fear and greed index. Doggy Dogecoin had that crazy pop off the 200 exponential moving average. Put the finger up Shib's butt. What? 40%. Could not get above that resistance though. Man, that sucks. I mean, realistically, you got like a double dose of beatdown. I mean, it needs to get above. It needs to close above that one or wick above that one to gain any momentum back to the upside. I have a feeling that Dogecoin is just going to end up being like the next XRP. Cardano, again, the cult is just, it's dead. It got the move up. This was all the anticipation for whatever made up thing that Charles was going to do next. And then since then, it's just bled out. It's bled out 33% of its value while basically everything else goes up. Yeah, Cardano still trash. FTM looks great. All-time highs, basically, like just chopping around up here. I expect continuation, more all-time highs. Already hit the target, the 1.618. I mean, at this point in time, I mean, we could put in a 2236, 2.5, 2.0, whatever, but realistically, it probably goes to $6. I mean, most of the time, once something breaks above the 1.618, it goes to the 2.618. We are seeing some definite weakness here, though, so probably can get a better entry. But, again, I mean, the risk-reward probably. I mean, an entry off of, like, 235 would be ideal. But even at, like, $3 right now with 100% potential upside, I mean, there's a strong argument to be made on that one. Coinbase, basically just at resistance. This is that same red ascending resistance, ascending broadening wedge in full effect right now. You're basically buying at resistance right now which is, this was our target, the 618 of the sell-off from the high to the low, you know, like our parabolic blow off top to our low down here. And we've retraced 61.8% of that move. So we probably top here. But what happens after we top? Well, we probably can get it back at like 275 or so. Maybe even at the bottom again. I don't know. Might have missed a chance on that one. But I mean, if it breaks out, 367. But again, I'm conservative, guys. I'm selling resistance every time. I'm buying support every time. I'm not going to just take a chance that this is the one breakout. And if I do, I'd look for a breakout, retest, and then continuation for an entry. I would definitely be taking some profits. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So not only did we take out the target, we blew through it, and we now are closing or have closed at the all-time low. So while we have a couple of wicks below our heads right now, just for a reminder about how I feel about Robinhood and how you should feel about Robinhood, let's just take out our drawing tool here and just remember what this means. So if this is all the people that ever bought Robinhood that are at a loss, or everybody that ever accumulated or took a position or longed Robinhood or anything, anybody that was ever bullish on Robinhood is negative right now, unless you bought this wick right here, this wick right here, or this wick right here. So the whole time you're going back up, and you know, obviously some people could have took profits, whatever, but anybody that's holding Robinhood right now, anybody that owns Robinhood stock right now is at a loss. Anyone from its, IPO. So if this is all, just imagine this is all resistance, all sellers, all people that hate Robinhood because it fucked them out of their hard-earned money. Because Robinhood was supposed to go to the moon and they fucked them. I hate you, Robinhood. Meh. I mean, do I want to be a buyer of Robinhood when everybody's standing above me with their legs spread, ready to just take a dump on my head? Or do I want to just wait? I mean, I'd say probably wait. But, where do we go? Does Robinhood start hitting some Fibonacci Extension targets to the downside? Does it go to 26? Does it go to 23? Does it go to 20? Does it go sub 20? Does Robinhood go into the teens? Does Robinhood go down to $18? Probably does. It probably does. It's going to take a little time to get there. It's probably not just going to gap straight down to the teens. But would I be interested in Robinhood in the teens? Yeah, I probably would. I mean, I'm not into teens normally, but for Robinhood, I mean, I could get down. I could get down to the teens for Robinhood. Man. Oh, how the mighty have fallen. I mean, what puts Robinhood in the teens? Probably more fines. Probably an earnings report. Oh, wait, no. Yeah, I mean, Robinhood. Whew. Big old red block of crap. Big piece of dump. Yep. But I'm robbing from the poor to give to the rich. I don't think that's how that's supposed to work. Michael Saylor, MicroStrategy. Again, complete failure. Why not just buy Bitcoin? Bitcoin is at all-time highs. Bitcoin is bullish. This is barely hanging on to the 200 exponential and simple. Does it look like it's getting ready for a potential breakout? Maybe. But what has to happen for this to break out? Bitcoin has to break out. So why not just buy Bitcoin? If this is like the underperformer. This is like buying ARK to own Tesla. You're like, Tesla's a good investment, so I'm going to buy ARK. Why don't you just buy Tesla? Well, because Tesla is in the ARK fund, so by buying ARK, I have exposure to Tesla, and then I get extra stuff too. Okay, sure. We can look at that chart in a little bit here. What does this look like? Ascending triangle looks bullish. Looks like potentially wants to break out here, sometime in the near future, potentially. something like that, something like over here comes back up. But again, that's going to be resistance. Measure move has already played out. Basically all but touch the 618, which is basically our target to the upside. So again, do you want to bet on Bitcoin or do you want to bet on, MicroStrategy? Do you want to bet on Tesla and Elon Musk, or do you want to bet on Kathy wouldn't want to be you? I mean, choice is yours. That's why markets are so great. You get to do what you want. I get to do what I want. And in the end, I take your money. Not your money, but the dumbass people that do the dumb shit's money. Bed Bath & Beyond looks like total trash. Does it bottom here at the 0.5? Maybe. I mean, I don't even know. This thing, every time I try to look at the fundamentals on this, I think, why would I ever take a position on this? I mean, nobody believes in it, especially not me. It doesn't have a cult, but it does have a big old gap. So is it worth taking a stab at 6-to-1 risk-reward ratio? I don't know, man. $12.60 stop loss, $22 target, $22.50 to the upside, 5.6-to-1 risk-reward ratio. Maybe just a little stab. This thing might be on the 10 under 10 next video soon. So, oh, Bed Bath & Beyond. I want to believe in it because I like that Adam Sandler movie, Click. Isn't that Bed Bath & Beyond? That was a good movie. If you haven't seen it, it's freaking, I mean, it's funny. But then it does get a little sad at the end. He's all old and fat. But then he's back to Adam Sandler again. Oh, spoiler alert. GME, Game Stonkers. How they doing? I mean, let's be real here, guys. This isn't even popular anymore. There's a million other meme stonks. There's a million other hodlers and diamond hands, and it's just old news. I mean, are people even doing this anymore? Are we still doing this? Let me know in the chat. We can stop doing this because I don't think anyone believes in it anymore. I think they've accepted their fate. Same with AMC. I mean, what is this thing? It's trash. No one even cares about it anymore. Lost to 236. It's going back down to scoop the lows. It's going to make it to the 200 exponential and simple. AMC, I mean, it's going to $30. It's going to 30. Lower high after lower high after lower high. The hodlers are just giving up. We're hodling. No. Oh God, we're doing it. We're hodling. No. We're doing it. No. We're doing it. No. And then eventually, oh, Mom, I lost everything. I'm never moving out. Oh, please pay me to mow the lawn. Oh, I'll do the dishwasher too, Mom. I lost everything. Oh, I never should have bet on the AMCs. The apes told me I was their friend. Oh, they're just some primate meanies. They threw poop at me and peed in my mouth, and now I don't have anything. Oh, Mom, that was my only chance. Now I'll be a virgin forever. Oh. Newegg. I mean, this thing's just getting wrecked. Straight up wrecked. Not unexpected, though. Look, we almost made it to the target. We got our little blue support line here that's barely holding up. We got our target down here at like $10.80. I mean, it's trying to bottom out something. Some kind of, I mean, what is this? At this point in time, we got what? Triple bullish divergence now? Boom, boom, boom. So this buy right here is probably going to be the good one. Could we have a winner, potentially? One of our meme stocks that's shitty? The problem with this is this at least used to be a real company. This is like the AMC of, I guess AMC, yeah. I mean, they were both legitimate companies. I bought stuff from Newegg not that long ago. So this is still a good business. I feel like AMC is not. So it just got meme stocked. So it just got way overvalued. God, you can't even draw trade setups on these meme stocks. All right, so let's see. If we get a retest of the breakdown, what are we looking at? 52%, 11% stop loss? Yeah, there could definitely be something here. There could be something here. On this triple bullish divergence with a bump back up to the upside. Could we see a move back up to $16.85? Possibly a stop loss below $10. If it goes below $10, does it make it on the 10 for 10 list? Or does it just go straight to zero? Remember, not too long ago, we were talking about this 821 cross right here. And I was literally talking about first we're going to eat this candle for lunch. Then we're going to eat this candle for lunch. Then we're going to eat this candle for lunch. And then there's going to be no more candles. And look what happened. We're back here. Now we're starting to get to where we actually have some support. So again, the reason this area is so important is this was such a strong resistance for so long back through here that it actually has like a potential to be a legitimate support now, because it was literally resistance forever. Let's just hope the gold chart doesn't end up looking like this. No, don't tell Peter. But yeah, I mean, that's probably a nice little entry. So we'll see. I will let you guys know in real time in the trade group and every Wednesday and Sunday on the online stream for free. DraftKings. Yep, still looks like trash. Again, trash. Trashity trash. Yep. Failure to break above the top of the channel. Got a little fake out breakout. A failed breakout. A throw over top at the 786. Lower high. Come back down here. Technically putting in a higher low. There is a strong argument to be made for a 17% target back to the upside, to the heart line, to the retest of the 200 simple moving average, slightly above the 200 exponential moving average, and the 0.5 Fibonacci retracement of the entire trend from the top to bottom. 5% stop loss, 17% move to the upside, over 3-to-1 risk reward ratio. If you want to gamble, let's gamble on DraftKings stock, not just online, right? Sure. $46. Do I like DraftKings at $46? The only problem is when you zoom out on the chart and just look at how far it's come in 2020. It was $10 fucking. And now it's 50. Did buy some stuff and do some things. People do like to gamble in their underwear. If only DraftKings sold options, I would definitely bet on it, because I feel like options is the new DraftKings. Yeah, so we'll see. There's definitely some potential there. All right, let's rip through a couple stonkeroonies and then we'll get out of here. Tesla. Oh, yeah, Tesla. I forgot about this. So, yeah, this is your... Oh, this is a little... Just for perspective. Let's take it back to the beginning of 2021. I just want to show something here. Okay, so this is the beginning of 2021. January 2021. We have Tesla is obviously the bars here. And then we have the ARK fund, ARKK, in red right here. Okay, I'll tell you what orange is in a minute, because it's going to piss people off, but it's money. So yeah, if you bought ARK and Tesla traded basically perfectly. ARK was slightly underperforming. Here they line back up almost perfectly. You're like, oh, here it goes. Kathy Wood's genius. Oh my God, you're losing everything, Kathy. And then meanwhile, Tesla has gone parabolic. So Tesla for the year is up like 70%. ARK is down like 7%. So basically, Kathy Wood is a failure. And then what's this in orange right here? What is outperforming Tesla year to date? What is it? I'll give you a guess. If you want to guess, here's your chance before it's too late. It's not a tech stock like Tesla is, quote unquote. It is a car company, though. But from January of 2021, year to date, it is the thing I invested in instead of Tesla, which was looking way better until Tesla went parabolic here recently. Now they're looking much more in line. Any guesses? Anyone? All right, I'm going to tell you. Spoiler alert. Tesla up 70%. Ford up 91%. Ford has outperformed Tesla year to date. Yep, that is correct. Ford, the old Mustang. That's the one. And then way down here in Crybaby Land, negative, is Kathy Wood, ARK Invest. It's the future. Bet on genomics. Think about this, okay? Kathy Wood's largest position in all of her ARK funds is Tesla, and yet her stock is sideways to down, and Tesla has gone parabolic. She couldn't actively manage her way out of a wet paper bag. So did she literally just get lucky when she bet on Tesla before? And Tesla went parabolic? And then really she just sucks at trading? She sucks at actively investing? And just Tesla did really good? Yeah. Yeah, that's exactly what happened. The answer is yes. Poor Kathy. Poor Kathy Wood. Can't make no monies for the people in the ARK funds. Oh, should have just bought the Tesla stock. I hate you, Kathy. Uber, big old rejection. Coming down here to close the gap, maybe $40. I don't know. It looks terrible. 200 exponential and simple, both rolled over. Retest, rejection, failing to hold that support. 821 curving to the downside. Thank God for Uber Eats. Saved it. At least give you a chance to get out before it goes straight to zero. Pinterest, obviously getting decimated as expected. Got that gap fill trade. Absolutely beautiful. Closed position. Brap, that's a wrap. After that, capitulation to the downside. Could potentially get an entry. And the completion of the gap fill, was that close enough to fill in the gap? I don't know if I even want to touch this thing. It looks like full-on free fall status at this point in time. Could come down to 36. Could we throw a fib up on here? Oh, we got one. We got one, bruh. Yeah, I mean, 36, 37, somewhere around here looks super juicy. I mean, when I put this in play, it was before it capitulated down to the downside. So, do we want to get a piece of it now, or do we want to wait and get down here? I think the real entry is down here. Especially, it's so early into like earnings too, that I'm skeptical to just like jump on anything that's gotten crushed. Because I feel like if this already got crushed when it reported, and then a couple other things start reporting bad, it's going to be like a further beatdown. Theoretically. Hypothetically. Let's keep going. Wish. I wish this thing would go up, man. It looks like shit. I mean, it's right back at our entry. There's still potential for this, but it's like, do you even want to take a 12% loss, or do you just get out and wait? I like it. Triple bearish or bullish divergence, or double at least from these lows. I mean, does it come down and put in a third drive of lower divergence? It does have blue slope line. Hard sell signal back at our entry point. Oh, I don't know what to do. Do we buy or do we sell? Oh. Oh, I don't know. Could go either way. It's still a beautiful risk reward ratio. 12% stop loss, 82% reward, 6.5 risk reward ratio. Juicy. But let's be real, probably could get a lower entry. But I got diamond hands. I'm not selling. Airbnb. It hasn't done anything. It's really just, it's got to go up or down from here. Well, duh. Of course it has to go up or down from here. I mean, for me to be interested in it. It could easily come back up here, but it's going to be tough to get above this 382. If it gets above that 382, it's going to start looking pretty juicy for that 236 retest, 190. But it's got to do something eventually. Bumble, again, push back up to resistance, push back down to support. One is going to break. The triangle is almost full now. I still think it breaks to the downside. But, we had a fake out right here. We had a couple fake outs to the upside. Is this just another fake out to the downside? I don't know. I think this is the one. But you said, I'm saying I think it's the one. I think this is the big one. The big capitulation. Yeah, I think this can be in the 30s real quick. But Bumble's revolutionary because the girls get to talk to the boys. Whatever. Baidu, retest, breakdown. China has not bottomed, in my opinion. I think continuation to the downside. Baba, same thing. Underperform. Continuation to the downside. TME, pathetic. 10-cent music. Continuation to the downside. Diddy. Diddy at my foot and I want to touch it. But should I? Just lower high after lower high. This is like slightly bullish that it took this out right here. So if it comes down here and puts in another higher low, maybe it looks like something. Maybe I'll wink at it. See if it winks back. It looks like it's basically just putting in like slightly higher lows each time. So could we get a buy-in right here? Maybe. We'll see. Looks bearish still. China still looks terrible. And that's just what they're telling us. Imagine what's really going on. Kanzun Limited, BZ. That's a pretty aggressive buy coming in right there. I mean, that's like a big old hammer. A bullish hammer off of support. But does it get continuation? It's just range bound as far as I'm concerned. If you were going to buy it, the area to buy it at was down here. Not now, not in the middle of the range. It's got to break in one direction or the other. Until it does, I don't really have an inclination in one direction or the other. JD.com. Looks better than most. But, I mean, realistically, this is probably support 76.28. That's probably the area to look at. But again, I mean, I couldn't even hold the 200 simple. It's probably just going to chop around here, push back up, slightly higher high. Is there a trade to be had? $10 to the upside, maybe a 10% move to the upside. But, I mean, could it wick down first and put in one of those hammer dojis? Yeah, it probably does. And it's got bearish divergence. Probably gets a third drive and then a breakdown. That's what I would expect. Obviously, me just speculating. It probably does something like this. Probably going to go down to here, then up to here, then down to here, then breakdance. But that's just me guessing. Neo chopping around between the resistance and support. Just lower high after lower high. Looks like it's going to break down. Hard sell signal coming out of the bullish control zone. Still above the slope line, and it is blue. It's really just got to hold $35, and it really just has to get above 43. I think it's just going to chop. Chop, chop, chop. Chop, 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 chop. All right. EDU, man, I thought it was going to bust through that 250. I really thought $3 was going to happen, but cross back down at 821. Yeah. I mean, realistically, at this point in time, this is what I'm paying attention to. If we lose this area, I might even cut this stop short. I had it at a 25% stop with a 162 target to the upside. But realistically, if we break down below like 195 and start closing below there, it's probably going to continue to the downside. Yeah, that one had some real potential. This is an actual company that does stuff and teaches things. But it's not that woke stuff, is it? A little bit. It is in communist China. Peloton, Piton. They got their new headbands coming out, so that's bullish. It should go up. $100 headbands. You can pull it over your eyes as it sucks your pet into the machine and kills it. And then you can get a Shibu. Then you can buy a new dog, one that pumps. Giant descending triangle. Looks like trash. I can't wait to see this earnings report. Estimate minus $1.10. I bet, oh man, it's probably going to decimate that. What was his last earnings? Let's look. Last one was estimate 44 cents and it reported minus $1.05. So let's just guess. Minus $1.10 this time. So it's probably going to be like minus like $3. Oh, what a piece of trash. I wish I could change the ticker to Nordic Track. Making our way downtown. Crushing these stonkeroonies. TSM, Taiwan Semiconductor. I mean, chopping between the moving averages. Underperformed. Couldn't even get back up to 200 simple. Look, this is just, it's nowhere land, and it's right in the middle of nowhere land. It's got to do something. You know, it's a buy at support. It's a sell at resistance. And even that's starting to look sketchy down here at like 108. I mean, this thing's on borrowed time. The stock and the country. Let's be real. Intel looks like trash. Got the breakdown as expected. I expect it to continue breaking down. I think that was only the start as you can see by the giant red line and my anticipated price target to the downside of the 30s. First I said the 40s. They thought it was going to the hundreds. Next is coming the 30s. Does it come back up here and fill the gap? Probably not. It probably underperforms. This thing is trash. It's trash. Trash. But it's undervalued. Maybe the market just valued it correctly because it's trash. Nvidia all-time highs, pumping. Left a little gap behind. Is it going to be a breakaway gap? Does it come back down and fill it? Probably fills it eventually, but does it go to 300 first? I mean, take your chances. Long the strongest. Sell the weakest. But I'll just buy ARK because it's got good exposure. And Tesla's inside of it. AMD. I want to see this level hold that support. Kind of bearish looking candles up there. Hard sell. So, it looks like this wants to pull back. Let's see if this level holds. If not, probably like 112. This thing is so overvalued. But the CEO's a woman, so that's bullish because we're woke. SMH, semiconductor ETF. Looks good. Looks like it's going to all-time highs. Looks like it's getting ready to break out here. Get above like 270 and it'll be at 300 real quick. Looks bullish. Oh, speaking of ARK, ARKK still looks like trash. Topping out at the 200 simple. Looks like it wants to roll over. I think it just chops around between 115 and 122. I mean, is Tesla strong enough to lift up every other garbage stock that she's purchased? Every other stock she owns is going down and Tesla's going up. ARKF, slightly more bullish, at least on top of the 200 simple. Very difficult time getting above this $55 range. In the event that it does, if it does ever get above $55, I mean, it could do something. I mean, this is just, yeah, that's a tough little resistance right there. If it gets above that, I think we realistically go to like 56, and then we finally get that 786 retrace, like $60. But in the meantime, you could have literally bought anything and done better than the ARK funds. Literally anything. Could have bought macaroni and cheese at the store, and it would be worth more than the ARK fund is. Comparison. Why are you so mean to Kathy? We love Kathy. She's a revolutionary. She's a visionary, and you just don't understand. Skillshare had a nice little push up here. Finally. Yeah, we had that triple bullish divergence. Finally played out between these 3 points right here. This is what I'm paying attention to, though. If we can come back down here, if this 886 holds its resistance, we come back down, I'm going to take a buy at like right around $10. Matter of fact, I'll probably buy slightly above $10, assuming that it gets front run. And then I'm not the only person looking at this inverted head and shoulders. At which point in time, I mean, this thing, let's just assume but you said Kathy's dumb and she owns Skillshare. Let's just assume 8% stop loss, 34%. Really, actually, it'd be closer to like 37% upside potential. Let's just back to the 786 Fibonacci. And then realistically, what we're looking for is we're looking for that juicy boom. That measured move. I mean, just a retest of the 200 exponential and simple. 56%. Potentially as high as the 618, and the 200 exponential, 76%. Starts getting like 10 to 1 status. Starts getting juicy, honestly. That's definitely one to pay attention to. Teladoc got a nice little pop up right here. Again, 1, 2, 3 drives of bullish divergence. 1, 2, 3 drives of bullish divergence. A little pop off there. Closed above that descending wedge. I did not take a position on this. Full disclosure. I think it probably gets up to like 159 to like 172. And then just continues melting down. Well below 200 exponential and simple. I think this was just bullish divergence, like relief rally, because it was oversold. Palantir just chopping, still chopping until it breaks below 24 or above 27.50, 28. I have no. I mean, it's above the 200 exponential and simple. It's just chopping. There's nothing to see here. We could do like a little bit of like a parabolic support now as it's starting to like round off this support here. You know, I don't want to see a break below, but again, that's just a 200 exponential. So as long as it's just chopping in this range, we're just looking for the break. But this is a bullish pattern. Breaks to the upside 66% of the time, but 34% of the time it gets wrecked. But yeah, I mean, I think realistically, $37 is probably in the cards. I mean, that is honestly like a 33% move, 40% move to the upside, so that's not bad. Unity Biotech, UBX, again, just been getting beat down forever. I did not take a position in this. Is it probably dead here? Yeah, I mean, it's not been able to close above the 21. So if it starts closing above the 21, now we're talking. Last close above the 21 was like June. So it's been a while. Unity Software, still pushing up here. You guys know how I feel about this one. Overperformed that last measure move. Still chopping. Probably headed up to 886 next, 159. After that, probably 167. And then, all-time highs realistically. Hard sell signal, reclaiming the slope line, still blue. I mean, it looks good. I think it's going to keep going. I mean, it's filled that gap now, so I wouldn't be surprised if it sold off, but it looks good. Zillow popping off here. Recross the 821 back to the upside. Retesting the 200 exponential as resistance. Does it keep on pushing and get that move back up to the 236? Yeah, I think it's going to be tough to get above 120. Does it get there, though? It's a coin toss right now. Now we're in the middle of the range, so I think it still has further downside, but does it go up a couple bucks before then? Maybe. I mean, that's like 15% move, but it's just no thank you. Bear market. Something doesn't make sense when we're at like all-time highs in housing prices and Zillow is like not doing well. There's something not adding up. Corsair looks terrible. Still looks terrible. I mean, is this going to be the next one to just have a little pop off and close the gap? Maybe like 7%, something like that. It's really got to hit this 618 before I can add. Or maybe even the 786. I don't know. I mean, this thing just looks rough. Bear market for sure. Zoom still looks terrible. Looks like it wants to go here. I mean, if the best thing Zoom could do right now is just go sideways, because then it probably gets this move up. But I mean, it can't even get that 821 cross and hold it. Man, this thing is just getting wrecked. And I mean, we're right at this previous support, acting as resistance now. You know, that's a key level right there for sure. What's that going to line up with a fib? Damn it. I told you I do it all the time, didn't I? Boy, you weren't kidding. You're a dumbass. Yeah, okay. So we've got, it's literally our 382. Oh, man. So is that going to be the one that takes us back to the 236? Yeah, it probably is. It might be time to pull the trigger on this and give it a shot. 7% downside, 21% upside, 3-to-1 risk reward ratio. Starting to build some momentum. Saw some resistance. Yeah, I think, man, it might be time to zoom on in here and see what's up. I'll give it a shot. I'll give Zoom a shot. Square. Sideways channel. It's got to do something. It's in the middle of the upper bounds. Looks okay. No real trade set up there, though, honestly. PayPal just looks like it's melting down, as we discussed here. 200 exponential and simple rolling over. I mean, I can't wait to see this earnings call right here. Man, we'll see. Somebody knows something. This thing's going to be at 209 real soon, I feel like. Got some pretty decent support at like 225. This measure move of the channel breaking out is playing out right now. So 220 to 205, somewhere around there is probably going to look pretty juicy. But I mean, if we break out of this sideways channel, it's going to look real bad. So realistically, oh man, am I going to take a stab at this before earnings? I mean, it's pretty much at the buy if we're going to buy that lower bound. Could get a little overshoot. I mean, obviously all these are on my like interest list or I wouldn't be looking at them, but this one's starting to look pretty interesting because I do actually like PayPal overall. The big problem I'm having with PayPal right now that makes me extremely skeptical and makes me think something is going on here. Somebody knows something. We're below the 200 exponential and simple. We broke down below them and we're seeing a ridiculous amount of volume coming in here. No divergence and a ridiculous amount of volume, but it's oversold. Yeah, but why is there this much selling coming in? You would expect at least a retest and then selling to come in if that fails. This tells me this is like insider shit right here. Maybe I'm wrong. But that to me is a big red flag, metaphorically speaking, but also literally. eBay, nice little pushback up here. What do we do though? Close the gap. What's going to happen now? I think continuation to the downside. I think eBay is going to come back down here to 65. Trade setup played out beautifully. This thing has been very strong. Overall, looks good, but it looks like it wants to come back down here. Maybe not quite to 65, but at least to the 200 exponential and simple. But again, I will take a long position there again. I think realistically, I mean, we'll see. I feel like eBay could do well going into the holiday season because I talked about this a little bit on the last stream. Because if people are having difficulty getting the stuff they want, they're going to go to like eBay or Amazon or some of these other, peer-to-peer or people that have stuff in stock type websites. A lot of people are going to be doing like arbitrage going into like Christmas season, running out to like toy stores or whatever, buying up all kinds of toys and then just turning around and selling them on eBay. Would not surprise me. Amazon's a little less, a normal person can't just go out and start selling on Amazon. You got to go through a whole process. But yeah, I mean, I would not be surprised to see that. You're seeing like buying limits put on a lot of stuff. Or they're just like trickling stock out, or you got the employees just buying everything when it comes in. But you typically see it with like gaming systems, hard to get games, Pokemon cards, or, Nike shoes, whatever. I would not be surprised to see it happening with like all kinds of toys going into this Christmas season. I don't know what the new like kids' toys are. What is it, Teddy Ruxpin? Is that what the kids like these days? GoBots? Is it He-Man? I can't even think of what. Power Rangers? Are the kids still into the Power Rangers? Snapchat. I mean, this thing got wrecked, left another gap now. It blew through the gap that we were expecting it to come and fill and left another gap. So now we just have a gap with a gap. We have gap inception taking place right now. I mean, this thing got juiced to the downside pretty bad here. I mean, what's up? That still looks good right there. I mean, are we going to wait for it to get down there? Are we going to front run it by a buck or two? 40% move back to the upside, 10% to the downside. Again, seeing a decent amount of volume. It's not as like red flaggy, but I don't want to normally see that below the 200 exponential and simple. Typically, the first time we come down to them, though, we're going to see it get bought up. So we'll see. A little hesitant on some of these. Apple looks good. Looks a little toppy right here. A little gap down. Close the gap. Still in the bullish control zone. Picking up some momentum here. Blue slope line. I mean, look, if you're not in Apple and Nvidia and, Google and some of these other ones, like, what are you in? What are you even in? They're the only good tech stock. And now, hey, Tesla's almost on that list now. I mean, technically it is. Amazon. I mean, still just going sideways. What does this say about Amazon? Man, I mean, what is going to happen with freaking Christmas for Amazon? Estimate was 890. Reported 612. What? Am I missing something? As reported, $6.12. Okay, not negative. I've seen so many negative earning stocks. It threw me off there. Okay, as reported, 612. They were estimating 890, and it missed by $2.78, 31%. Wow, that's wild. I can't believe Amazon even missed. I mean, this whole entire time it's done fine. The last miss was back here, April 2020. April 2020 it missed. So that would have been the quarter leading into that. That's wild. But I mean, it was already going sideways forever. God, that's so crazy. I mean, it's up a nice percent since then. But I mean, it just chopped sideways for so freaking long before that burst up. And now it's just doing the same thing again. So what's it going to do? Oh, man. We'll have to see. This is a crazy time. I don't know what Amazon looks like right now. I mean, when I order things off Amazon, they still come fast and I still find what I want at good prices. But it's weird to see them miss with everything going on. I mean, I guess things were reopening. People were buying stuff in person. There's an argument to be made for that. But at the same time, what is that going to mean? I think Amazon's going to be bullish going into the end of the year. I really do. I think it'll have a good fourth quarter. Facebook, aka Metro or Meta, whatever they changed their name to. They're like, we're rebranding. They need to rebrand and get somebody else instead of Mark Zuckerberg as the face of the company. Get that lizard guy out of here. Get a human to be the leader of your company. They're like, oh man, we're getting a lot of bad publicity because people are spending too much time online and they're getting depressed and we're giving them body issues and we're negatively sending them information. They're like, what should we do, Mark? I think we should change our name and just dive headfirst into more internet. But Mark, people might be spending too much time on there and people are mad about the algorithm and the negativity, and yes, embrace the dark side. He's like the Emperor Palpatine of fucking Facebook. Alphabet just crushing, dominating. They have that awesome platform, YouTube, that's just amazing and just awesome. And I just couldn't think of anything bad to say about it ever. Momentum to the upside, all-time highs. Alphabet / Google. Googly eyes for Halloween. Just let's go. And last but not least, Squid Flicks, looking good. Finally found a winner. Throw enough shit at the wall and it finally sticks. They got another Squid Games coming out. Yeah, it looks good. Dominating. Who doesn't like the Netflix and chill? I mean, obviously. Yeah, it looks great. Hit the measure move, 1.618. Overshot. Could top out here, but honestly, probably just rips. Probably just goes to like 845. Probably just dominates. Probably just pulls the whole stock market up with it. I mean, if I told you right now that I came back from the future and Tesla and Netflix just went parabolic with Google for the next like 3 months, 6 months, 1 year, and just went up 50% each, would you actually be surprised? Or would you just be like, yeah, that makes sense? While everything else like goes sideways to down? Yeah, you probably would not be surprised at all. You'd probably be like, man, you should have told us. I'm like, I am telling you. I'm from the future. I'm telling you right now. Well, that's it, guys. We did it. We made it to the end. Hooray! 2 hours and 38 minutes. Nice. Chili's made a big move. Oh, was that one you asked about? Dude, I don't even know what that is. I don't even remember. I think we were bullish on that, weren't we? I can't remember. I obviously deleted it off of the list of things to look at. I could pull it up. Let's see if my computer's still mad at me. It's like pissed. It's been telling me I need to reboot it for like, I don't even know, forever. I just reschedule it every time. Let me look. What are we looking at on? Binance? Is that right? Oh yeah, look at that, bro. I hope you got in. Perfect. Came straight down to the entry beautifully. Beautifully. 30% was the initial move up here. Dominated that. 59% was the next move and second trade setup. Dominated that for a whopping 786 push. 115%. Dude, I hope you got a piece of that. I mean, at this point in time, that's juicy. It pulled a bat. Pulled that basic attention token out. Yeah, I mean, I didn't even expect it to go nuts like that, but these shitcoin pumps could be fantastic. Like I told you with BAT, I was like sitting there with my finger on the trigger, ready to sell. I'm like, oh, I'm about to take profits. I'm like, I'll just hang tight for a minute. And then another like 40% to the upside. Yeah, that's awesome, brother. Hope you crushed it. I still have no idea what it is. I do like the ticker, though, because it's not Chili's. It's cheese. And I love cheese. What was the other one? Somebody asked me for something else, too. Daniel, what's up, brother? Good to see you, man. Welcome back. Hi, everyone. New to the Shiba. Oh, wait. New Shiba? The cat girl token? Buy now? Yeah, no. Yeah, bro, we only like dogs here. We don't like cats. Sorry, man. This is dog only channel. Cats suck. Sorry, bro. No cats allowed. I mean, you can stay, but don't be shilling your cat tokens in here. It probably is a total winner, though, I'm sure, because it has an animal in it and also rampant speculation. So I'm sure it'll go up by 10 million% for sure. And I'm not even being sarcastic. It probably will. But seriously, though, we only like dogs. Sorry. But yeah, that's going to do it for today, guys. Hopefully you enjoyed the stream. Did that breakdown in the beginning. Correlation between the 10-year Treasury Yield, XAU, DXY, and Bitcoin. Got a rough little idea what to expect and what we're paying attention to. It appears that during the stream today, Bitcoin has had the breakout of our descending channel, come back down and retest it as support, came back up and appeared like it was going to break to the upside, but it is now back at the top of the channel, retesting the resistance as support. If this area holds, I do expect continuation to the upside and the measured move back down from that 57,850 range to the top of the channel, which was roughly 61,500 for a $2,000 to $3,000 pump to the upside. But if we should break back down below this level into the channel again, I would expect continuation, potentially to the downside, at least on the short term, and a retest of key Fibonacci levels and supports, moving averages as well. Well, there you have it, guys. Hopefully you enjoyed the stream today. I know I did. Appreciate y'all chiming in. But that's going to do it for today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I will see you guys in the group. Always enjoy our interactions and should have a long and short-term target to the up and downside video for Bitcoin and Ethereum as well. It is 7:46 Eastern Standard Time on 10/31/2021. If you celebrate happy Halloween to you, my friends. If you do not celebrate Halloween, then no candy for you. But that's going to do it for today, guys. Appreciate y'all. Make sure you like, share, subscribe, all that good stuff. Stay positive. Protect your principal. Make sure to take profits along the way, especially when you get these large parabolic moves to the upside. Don't be greedy. Protect your principal. Grow it. And don't show it to somebody unless you get consent or they ask for it, like on Bumble. But with that, going to do it for today, guys. Crypto Trend Trader, and I'm out of here.